Hey, danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player. Feeling like Pac, represent. On my block, try to knock me down, but I come up on top. Yeah, they wanna see me flop. Got a plot, want a lot, I won't stop on my pops. Got so many flows, it's insane. They don't really understand the game. Got a plan and it's plain, I ain't playing. I'm just trying to gain. I wanna get that big bag, need that big racks. Blow up Tic Tac, where the blue cheese at? I don't give a fuck about your feedback. Eat that, get back, sit back, watch me spit that kickback. Got so many flows, yeah, they think that I'm insane. Ghetto kids in a lot of pain, all about the bills, ain't shit changed. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game, I'm a player. If you a hater, I don't hate you. I'm just really happy that I ain't you. I just wanna thank you. You kept me motivated, so now I motivate you. There's a lot of cake, money on my mind like a banker. Coming through with them bangers, ain't no room for mistakes. Lot of stake, hustle till we get a lot of rooms, lot of stakes. Good kid, but I keep it gangsta. All gas, no brakes. Got cash for the case. More cash in the case. More cash in the safe. More cash on the way. Hustling all day. Ay. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player. Danger, coming with the bangers. Where my fucking paper.
Said I'm taking big shots, just stop where I'm driven, no pit stops. This hot, I ain't playing like the 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like the 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. They been trying to get me cheap like a thrift shop, but I told them it's my time, check the wristwatch. They been talking way before they even doing something. Whoa. If they wanna play, let's get a tip off. Ain't no silver lining, dawg, this some rose gold. Getting new money, I'm a old soul. Yeah, I get it bouncing like a pogo. Whoa. And I'm too cold like Frozone. And my chick elastic, girl. Told them we ain't in the faking, this ain't plastic, girl. Bought a new whip and cash, now my taxi thorough. Way I'm shooting like step, but my pass is bro. The way I'm playing the field, I'm in a league of my own. And now they all in they fields, I got them all on my phone. But dog, I'm hitting the climb, I got no time on the low. Way I'm shooting is messy, the way I'm hitting the goals. I'm taking big shots, just stop. Way I'm driven, no pit stops. This hot, I ain't playing like the 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop, where I'm driven, no pit stops. This hot, I ain't playing like the 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. I just left, but you know I'm coming back though. Whoa. And you know I don't play by my rags though. Now go and turn it up to the max, whoa. Send a paper to me now like a fax, whoa. Yeah. Got 2 phones ringing off the hook now. When I'm in the city, I get looks now. I was going bad, but I'm good now. Said I had to go and put my foot down. Told them I'ma get it and go. Nah. Even in the summer, man, they knowing I'm cold. I got a couple checks coming that I made out the flows. Might get a couple more popping if I do it some more. I gotta do it for real. Said I'm back in my bag. All my digits are climbing just like they all on a dash. And they tell me slow down, cause dog, I'm moving too fast. Might go and caught me a Tesla, cause dog, I still got a gas. Said I'm taking big shots. Just stop, where I'm driven, no pit stops. This hot, I ain't playing like the 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop, where I'm driven, no pit stops. This hot, I ain't playing like the 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop, where I'm driven, no pit stops. This hot, I ain't playing like the 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop, where I'm driven, no pit stops. This hot, I ain't playing like the 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots.
Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Ayy, on Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command like, yeah, you about to see me on demand like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the road, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the road, here we go, here we go. Here we go, at the top of the class on a roll. And it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go, yeah. At the top of the class on a roll. Hey, and it's time to run it up, yeah you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the roll, here we go, here we go. Here we go. On a roll, here we go, here we go.
What is going on, everybody? Welcome back to another FOMC Frankie Candles live stream. Chaos has already started here, to be honest with you. We're getting a little bit of wonky candles here. But what is coming next for Bitcoin, guys? Oh man, are we gonna get the rip? Are we coming up to 92 to 93K? Are we getting the dump back down below 86? We're going to cover it here today, and we're going to narrate the live price action like we did yesterday. Having a great time on these earlier live streams, guys. I'm not going to lie. It's a lot of fun. And, yeah, we're going to have some extra chaos today. So that's it's going to be a good time. I want to talk about... Well, we'll mostly cover the live price action, but we'll kind of talk about what we're expecting next. We do have the green dot printing on the daily for Market Cypher with our 80 and 90-minute money flow crossover into the green, which is what we were looking at yesterday. Still technically kind of struggling around the resistance levels we were looking at. But is that money flow going to be able to cook us up towards the value area high at about $93,300? We're going to talk about it today. Maybe we'll see it happen. Maybe we'll get a crazy wick. Maybe Powell will send this thing flying. Who knows? But shout out to the Mafia. Thank you guys for being here. I appreciate every single one of you guys. Shout out to RG. Said, I love the goat sounds. Yeah, we got Phoebe here. She usually like curls up in a ball and sleeps next to me while I stream. And sometimes she's just loud. We call her DJ Phoebe. But shout out to you, man. Welcome in. We got Passerby just passing by. Welcome in, man. Said, where can we get that hat, Frankie? If you guys want a Frankie Candles hat, proven to increase your profitability by 300+%. You can check out FrankieCandlesTrading.com. We got all different types of colors and stuff. Go check them out. Man, people love these hats. Simple design. Mrs. Candles made these. Like, she designed them. So, shout out to Mrs. Candles. Let's see. Yo, shout out to Cigar Attach. He said it dumped 7 out of the 8 last decisions. Shout out to Cigar Attach. Well, we'll take a look. Obviously, the higher time frame still not looking great, but we're above the value area low. We got the money flow coming up. Maybe we could get a little squeak to the upside. We'll see. But shout out to you, brother. Welcome in. We got Chris Amella in the chat. He did his enema today, so he's all hyped up. Shout out to Chris Amella. We got Darren Does Things holding it down. Tony D in the chat. I'm sure some of the other mods will hang out. We got Kalia in here. What is going on? We got Rudy with a Y. Welcome in, Rudy. Good to see you in here. And shout out to Chad, I think that says, thank you for everything you do for all of us, Frankie. It's so nice to have someone I can trust. Yeah, shout out to Chad. You ain't going to get no, fake hopium, random, emotional, manipulative TA here. It's only raw information. We're not right 100% of the time, but we're dang close. We're better than the weathermen. no winter storm here, guys. We got totally scammed on that winter storm. Not scammed. We escaped the winter storm. But anyway, with all that being said, guys, let's go ahead and jump on into smash that like button, the charts. Let's get into it. Let's see. Yeah, guys, if you guys like the earlier stream, smash the like button so we know. Like I said, I'm having a real good time doing these lately, and it's time for a change. Time for a little bit of a change. Get that daytime volatility. Hey, from Ireland. Hey, shout out to Daz. I can't see that full name, but shout out to Ireland. What is going on? But obviously, guys, we got FOMC today. Chaos very likely to ensue. It's already kind of started here with these kind of crazy wicks. But I'm going to kind of start on the medium time frames, and then we'll jump on down to these lower time frames. Shout out to the volume profiles, guys. I mean, the scalp range that we were looking at did end up getting filled. You can see we jumped in on top of that value area low, back up to the PLC, flipped the PLC, back to the high, came into the high, back to the low, back to the high. We're just kind of bing-bonging around in this range, but we'll cover that in just a second. I do want to kind of cover the medium time frames and kind of give you my overall thought process here. Now, obviously, if you guys watch the show, you will know we've been kind of battling with a little bit of a kind of difficult, I don't want to call it super difficult, but a little bit of a difficult situation because, we've been wondering, if, just like everybody's wondering, are we going to be able to see the continuation of this bigger retracement to the upside? Can we start heading towards the 50-week moving average, currently sitting at about $101,000? Can we potentially get above that and push into 105 to 110K? These are obviously some of the bigger key levels if we see a larger retracement come in. Is the bottom in? Are we going to all-time highs? Of course, I do still think that's the lower probability. Of course, it's not impossible, but I think as we get, if we get that bigger kind of retracement, we can start looking at price as we kind of bing bong around at these higher prices, look for some signals, and then, we'll try to figure out if it is possible to come into new all-time highs. But obviously, we have the weekly money flow trending out here in the red. We got the red dot printing. So, of course, the higher time frame sentiment right now is, although we can see a little bit of a bigger push to the upside based off of some of the things I'm going to talk about right now, of course, the idea of the lower highs and an eventual bigger capitulation to come could be in store. And kind of the thing we've been talking about is, are we going to get the bigger retracement, or are we just going to kind of continue this trend to the downside and grind down and break out of this, bear flag, if that's what you want to call it? Are we going to break out of that sooner than later? And that's kind of what we've been trying to figure out. And, one of the things that's been keeping us open towards a bigger retracement coming in, I mean, number one, we're at support, right? We have the current value area. We're above the low. We have the long setup here from the SFP of about $86,300. As you guys know, I was not there to take that position, but I am still holding a long from a retracement. So I am in long, but we're at the value area low, right? Like, we do not get bearish down here, right? Even if we are, still bearish for bigger moves down, we do not look for shorts down here. We have the short and the premium from the POC zone, and we also are still short from 97, 98K. Shout out to John Santos, said Mafia short from 97, long from 86. I'm technically not long from 86, but I am long. But we did have the setup in the Discord there. But, not getting bearish at these support levels, right? It's not the place to be looking for shorts. If you want to look for the shorts, you got to wait for those retracements back to the upside. So, we're above support, right? Like, if I can give it the bullish case, we're above support. We're inside the value area. Obviously, the thought process of potentially filling this volume profile in full is in the cards. And as we looked at yesterday, we were watching this daily green dot looking to print. And as we were looking at the live price action, we also did see a lot of shorts entering on the pump, putting that liquidity above, opening us up to a potential squeeze to the upside. And we finally did get that green dot. I'm surprised it didn't print while we were live, but of course we saw that VWAP coming up, anticipating that green dot. And not only did we have the green dot, but right now, one of the other things we were looking at was this 80-minute money flow looking to cross into the green, and our 90-minute money flow also trying to come up. That gives us a market cipher B 1/16th bullish setup. Typically, when we see those money flow crossovers can indicate that the trend is likely to continue to the upside. You also have the volume profile on your side, right? Go from the low. Next likely place for price to go is to eventually, hopefully, hit that point of control, flip that POC, and then head up towards that value area high. So this is the overall major range that I'm looking at right now. Value area low, about 86,200. POC sits up here in confluence with our daily naked point of control. These are going to be the key levels we're going to watch today. If we get the move to the upside, we're looking between 90,812 and 91,000. 1,254. If we get the drop to the downside, I'll cover the local support, but the major support still sits down here between the daily naked point of control, obviously the value area low, and the daily, leading us down to about $85,435. Of course, money flow pointing more towards the upside here locally. So that's going to be kind of the two major levels we were looking at. We're going to be looking at today. Yesterday, we were watching this level. We ended up coming up to tap it. And of course, we were watching this level as well. But going to be looking up here. And then, of course, I'll cover those local supports. You know, we'll probably pull up the 1 minute time frame and watch the chaos go on. But it's just overall, right? Like medium time frame. Money flow starting to come up here on the 90 minute. 80 minutes already crossed over. You got the green dot. That's the bullish case here for the continuation up. Biggest levels to watch right here. Get above the POC. It's going to be looking at between about 93,235, and then your golden pocket runs you up to about 93,762. And then, of course, I don't know if we're going to get all the way up here, but if we did, this is the line in the sand in order for me. Flip this to support. That's where we can start looking for a crack of this high, which is technically in the cards with our money flow in the green. Question is, will it play out? Because, you know, obviously there's been some mixed signals here. The reason this is kind of a difficult scenario, trying to figure out if the high is going to get taken or we're just going to continue our downtrend from here, or, you know, continue our overall downtrend and not break the high. It's a little difficult, right? Because the daily money flows in the green, but then we start looking at the 12-hour money flow trending out. We look at the 10-hour money flow in the red. Now, of course, it is trying to come up, but that VWAP is rolling over. This could just be a low before another lower low, right? Once that red dot prints, we'll see what happens, right? There's no real saying we need price action to develop. This could just drag into a deeper red wave. So, you know, there's not a ton of confluence here. Even the 8-hour money flow and VWAP rolling over. And you look at the daily, it's like, oh, daily money flows in the green. You can't ignore it. But it's not like we have all these time frames with like beautiful red money flow waves crossing into the green leading into the daily, right? So it's kind of like by itself here. So again, we just kind of wait for those key levels and we take those trades when we get those reactions. So, or the confirmation. So I am holding two shorts. I am still holding my short from up here. Stop loss in profit. I don't think I'm stopped out of that. And then I'm obviously also holding the short from the premium here up at about $98,000. Also, profits locked in, stop loss at break even, guaranteed winning trades. And then my long position is from down here. Excuse me. As we looked at yesterday, let me just hide this resistance. Right, we were looking at this. Come on down to a lower time frame. Long position. I believe it's from right down here towards the value area low. Yeah, we came down to the low. We had some bullish divergences. So I am long from about here. Had the setup in the premium from down here, but I wasn't there to take it. I know a lot of the Mafia took it, though, so that's very nice. So those are the trades I'm holding. I have them open here. I'll show them in a minute. But locally, guys, what are the local levels, right? When we're watching this live price action during the live stream, this is going to kind of be our canvas. We have the local volume profile, of course. We got the push up. We break out of the local profile. We get accepted back into our old range from back here. We flip that value area low to support into the POC, flip the POC up to the high. We talk about the high probability rotations through these profiles, guys. It's insane. But this is kind of what I'm going to be looking at. We got the hyper local range here. And the biggest key level of support that I'm going to be watching today is I really don't want to get accepted back into this lower profile, right? We have value building higher. If we do come back down, this level sits between about value area high at about 88,524. And then, of course, that is confluent with your value area low right here. So if we do wind up coming back down, right, value area low, maybe a little deviation, you know, we're kind of hoping we can hold that, right? Because if we get accepted back into this profile, what is that going to insinuate, right, or indicate? Get stuck inside the range, potentially come back down into this lower value. So, like, this is kind of the level we really want to hold. Now, it is FOMC, so who knows? Maybe we see something like, woo, right? Just crazy wicks. So be careful out there. If you're out there trading, if you're a new trader, guys, be careful. Set your stop losses. Make sure you're not risking a ton of your account because, you know, you're probably going to get those crazy whipsaw wicks to stop everybody out. So please, for the love of God, be careful out there. Let's see. Yeah. Oh, wait, guys, I forgot to do it. Hang on one second. What time is it? 1:46. Hang on one sec, guys. I didn't do it. How did I miss this? BRB, guys. I don't know how I forgot to do that in the intro, guys. Oh, my God. Powell. You know, that would be much more epic if he's just like dropping race to zero and things are mooning. That's when you got to play that. Dude, I feel bad for Powell, man. He's made out to be the enemy. He seems like a really nice guy. That's somebody's grandpa. Shout out to Powell. But hey, don't screw us over here. This is the reason RAM is $1,600. Shout out to John Santos. Oh, man. Haters will say it's fake. Yeah, I mean, that was his live FOMC. I mean, I don't know how people you could see the press in the crowd. We had Mark Zuckerberg out there. I mean, I don't know how people could think that's fake. I can't believe I forgot that. Missed opportunity, but hey, good thing we remembered. Am I long or short? Shout out to Vision Pulsed. I am long and short at the same time. I just kind of covered that long from this value area low, and then I am still holding a short with my stop loss. Actually, I think my stop loss is at break even, but profits locked in, so guaranteed winning short from up here at around 90,800, and then I'm also holding my short here from $98,000. So long and short here, just playing both sides, scamming them, guys. If you can't make money on the longs, just take shorts, and then want to play out, right? Of course, that's not an actual strategy. There's there's actual thought process behind this. If I get stopped out, I'm not just like long here, short here, waiting for one to get me wrecked. If this stops out, short will make I'll make money on this short because it'll get stopped out in profit, and then the long will continue to pay me out. And of course, still pretty protected here on the short from 98K. I don't think there's a chance of that getting stopped out unless we start. Actually, this one's in profit, so I'll probably be stopped out at this point. But I wouldn't be expecting to take out this high until we can crack about $95,300. Let's see. Shout out to Perry, said, Frankie, when I met you for the first time, I searched for that music, Here We Go, and I was sad because I did not hear the goat inside the music. Yeah, Phoebe DJs that live. Phoebe actually runs the intro music, guys, so shout out to Perry. So, yeah. That's what we're looking at. We'll see, if we get this chaos, we lose this point of control. This is the big key level that I'm going to be watching. And then if we lose this, guys, probably going to be looking for the bigger move down. We also do have a little bit of a 4-hour red dot potentially looking to print here. Hopefully, it doesn't give us a massive drop down. Hopefully, it can just kind of give us a little pullback to hold support, and then maybe we can scam to the upside. But again, with the volatility on FOMC, kind of anything can happen. I wouldn't be surprised if we just kind of get whoop, just kind of wick around before we kind of pick a direction. So taking a look at some of the altcoins before we will play the live stream as well. But before we get into that, Ethereum still holding the value area low. We deviate below, bounce off the 786, flip that value area low to support. Next major target still sitting up here between about 3,061 and the POC at about 3,086, right? Kind of the same situation as Bitcoin's bigger range. Whoops. Wrong chart, guys. Wrong chart. Right? Kind of the same thing. Value area low, bigger target up here at the POC. Same exact thing on Ethereum. If we flip that POC, well, we do have the 786 sitting up here at about 31.38. But at the end of the day, right, once we get up there, right, if you can get above that 786, right, the overall anticipation would be to fill that range in full. But you got to be careful when you have that key resistance. You just can't ignore it. Also, daily green dot is now confirmed on Ethereum. This kind of front-ran Bitcoin. Money flow trying to come back up. We have the 90-minute money flow also trying to flip into the green here. 4-hour red dot is printing. So pretty much the same outlook as Bitcoin. Obviously, same kind of structure, just different numerical levels, right? Value area low sitting here at 2880, POC up here at 3088, value area high up here at about 3256. And when we look at these volume profiles, guys, like even over the previous recent live streams, right? We see these volume profiles back here, right? These play out beautifully. And then we get accepted back in, flip it to support, POC value area high. That same exact scenario remains the same on higher time frame ranges as well. They just take a lot longer to rotate, right? Those small scalp ranges will fill oftentimes very quickly, and then those higher time frame ranges, right? Like we flip this value area low here. Come on. Flip the value area low here, and then it takes us, 2 days to get up towards the POC. So they obviously take a little bit longer to rotate. Let's see. Shout out to Pravi. Says, Golden. Where's Golden? Somebody get Golden in here. Send out the golden bat signal. 4K, 4-hour red dot on ETH. Yeah, the red dot on ETH is printing, right? Again, like very similar charts, right? That red dot prints, right? Bitcoin's very close to having that 4-hour red dot print. Money flow attempting to curve up here, right? It's headed in the right direction. 2-hour money flow trending up. 3-hour money flow trending up. So, the hope here to fill the rest of this volume profile is to see this money flow continue up. Red dots are okay for pullbacks, but we really just want to see that trend continue to the upside. Money flow always indicates the overall trend, as I say every single live stream. And I'm trying to see. This is really the biggest support, in my opinion, right now for Bitcoin. If we did end up breaking below that value area high, breaking below the value area low in this previous value area high, I mean, you have your POC at about 87,755, your value area low at about 87.3. Let me pull a full fib here real quick and see where that golden pocket 786 lines up. See if we get any confluence there. Yeah, you got a little support there on the point of control, but at that point, it's like, we get back down into this range, bounce off the POC. It's like, I'd rather see that fill in full. So we'll see. We'll see if we break down there. We'll try to find some other key local levels. Yo, shout out to Darren. Said I'm on my laptop now. Y'all behave. Shout out to Darren. Oh man. Polymarket 100% no change. Yeah, that is the expectation. You guys kind of know how I handle these FOMCs. Obviously, you do get the kind of like volatility, but unless he comes out and says something unexpected, mostly the stuff, the rates are priced in, right? If he says they're not going to change it, it doesn't change. You get the volatility locally, but it's really the news that is unexpected that really creates those big moves, right? If he's like, we're going to drop rates like crazy or something like that, and everyone's expecting them to stay the same, then that's where you can see like a really, really crazy decisive move. Let's see. Bitcoin coming to the 200 EMA on the weekly, then it's decision time. Yeah, shout out to Pravi. We took a look at the 100-week EMA last night. Somebody asked me to take a look at it. Obviously, guys, like from a high time frame perspective, the 50-week moving average is obviously a huge level that we've already lost. But you also have the 100-week moving average, right, and the 100-week EMA. I'll pull up the. Can I change this to? Yeah, so you have the 100-week EMA holding, right, which is obviously confluent with the value area low, the $86,300 liquidity, like confluent with all this support. So, this is huge, right? In the past, at least not necessarily the EMAs, but the there we go. 100-week moving average. This is the situation, right? We've covered this so many times. Typically, you lose the 50-week. The 100-week is kind of that next big level, right? You got to get stuck in here. We bear flag out. You reject the 50-week. You get that bigger retracement. This is the bullish case here. This is what we're hoping for, to head up towards that 50-week moving average with our money flow in the green on the daily, which is very similar. Of course, we don't have a lot of confluence in our current situation, but, it is open, right? That's why I'm open to a potential break of our current high here, right? Money flow in the green. That indicates you could continue the bigger trend up. You're holding support. So it is open. But overall, right, this is bullish, right? Money flow in the green. Trend continues up, right? But you hit into that major resistance. That does not step on the weekly money flow. The weekly money flow coming out indicates that even if you get the bigger retracement, lower highs and lower lows are more likely. And there is probably going to be one more bigger capitulation down. Hopefully not, right? Maybe the bottom's in, but the statistical higher probability here based off the charts is probably for something like this to happen. Not just because it looks the same, but of course, right, you come down, you hold the 100-week. You didn't tap it, but you essentially hold it as support. You get the retracement. And then once you lose that 100-week, big capitulation down. Bring it back down to previous cycles. 2017, break in, bearish retest. You lose the 100-week, big capitulation, all perfectly in line with the weekly money flow crossover, right? Even here, you break down, bearish retest, 100-week, 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 you lose it, big capitulation in line with that weekly money flow crossover, and you just, 2021, you lose it, bearish retest, lose the 100-week, big capitulation, weekly money flow crossover. We're in a very similar situation, whether it plays out or not. Right? This is the situation we're in. Hopefully, for the bulls, we can get the bigger rotation up or bigger retracement up. But once we lose that 100-week, it's like big capitulation very likely, and money flow head in this not the right direction, but the same direction, right? It's also perfectly in line with that weekly money flow crossovers. This is what makes me concerned for another capitulation down. And even if you want to take a look at it from a volume perspective, right, it would make sense that if we lose these lows, we would see a very fast capitulation because there's just a massive low volume gap, right? Price sticks to the high volume nodes. Price does not get held back or held up through the low volume nodes, right? So even from just a volume perspective, if I wasn't looking at market cipher B, if I wasn't looking at any of the things that I'm looking at, I would say if we lose this low, very likely, right? Unless you could get fake outs, right? But if you decisively lose this level, probably going to be a fast drop to the downside. So there's even just from a chart perspective, a reason to think if you lose this level decisively that you will see a fast drop to the downside. Then you start comparing it to the same situations we've seen here. When you lose the 100-week weekly money flow, massive drop, massive drop, massive drop, right? It all makes sense. And the volume is obviously not just some random indicator. Volume is price, right? So there we go, right? So high time frame remains the same. So we're just hoping, right? Bull case here, holding support. Come on, baby. Give us the bigger retracement. Give us that 50-week. I know everybody wants it. Come on, J-Pal. Give me 85K. Shout out to Indian Martini. I'm going to F and buy. I don't care. Shout out to Vex. Hey, long term probably, will pay out, right? There's never been a bad, at the end of the day, over a long enough time horizon, right? Like there's never been a bad time to buy Bitcoin where you're not going to make money at some point. Not financial advice, of course. Could go to zero one day. Who knows? I don't think that, but let's see. 7 out of 8 FOMCs saw Bitcoin dump afterwards. Will this time be different? Shout out to Brillo. Hopefully. Hopefully, like, even when you get, like, the pumps, like, they've been, like, short-term pumps just to roll back over. Now, we'll see. Maybe they want to run up and fill those upper CME gaps. Let me actually pull up. Yeah, so we do have one up here at about 94,415, an RTH gap. Probably different. I don't know. I think a lot of people look at the ETH, but we do have some upper gaps that could potentially fill. So we'll see what happens. Let's see. Shout out to Chillwada said, Frankie Candles, if you don't have Market Cipher, what free thing would you use on TradingView that can track bullish and bearish CVD? Shout out to Chillwada. I don't use Market Cipher B. Market Cipher B does not show you CVD. But if you're asking what I would look at to look at CVD, one of the free tools is Coinalyze. If you just Google Coinalyze with a Y, that's a free tool that you can use to. They have a ton of like order flow indicators that you can use. That's totally free. I have no affiliation with them, but you could check them out. They're free. Fed pause interest rates. All right, well, there you go. Not a surprise there, obviously. Shout out to anybody who bet on that on Polymarket. Shout out to Tony D on the Frankie Candles account. Thank you for that, brother. So we'll see. Maybe we'll get some more volatility while he speaks, but yeah, obviously that was the expectation. I meant divs. Very simple, right? You could just use the RSI, right? I like to use Market Cipher B because it gives you a little bit more obviously, you get the money flow, which is a huge thing. But the thing I like about Market Cipher B for the divs is just simply like, let me try to find a clean div here. Right. When you're looking for the higher high on your price, the lower highs on your momentum waves, right? There you go. Higher highs, lower highs. I like this because I can look at the VWAP and I can say, well, hey, if I put a higher high in here, how do I know if this is likely to put in a lower high? Once that VWAP starts rolling over, it indicates that red dot will print and that momentum wave is going to start slowing down and stop there. So I could kind of anticipate that bear div and front run them. So that's like why I choose to use Market Cipher B for the divs. But if you pull up just the simple RSI, you're going to get almost the same signals as far as the actual divergences. You might see slight discrepancies. Yeah, you could see here we actually did make a slightly higher high. So you would have technically missed that div. But for the most part, like I would just say the RSI. It's a very simple way. Very simple way to find the divergences. Like if I pull up the weekly, just to show like a drastic example, right? We have the weekly. massive weekly bearish divergences on Market Cipher. These were very clearly also on the RSI, right? And all like the major divs, right, the extreme ones are probably going to just pop up on the RSI as well. Even back here in 2021, we had the Market Cipher divergences, and it's on the RSI as well, right? Even if you pull from this high. So I would just say the RSI. Very simple, very free. You can get it on your chart right now. So there you go. They didn't change it. They just left it unchanged. Yeah, they paused. All right, yeah, I guess they just left it. Coinalyze. Yeah, long bottom. It's no. Sorry, bro. It's COIN lies. The I in eyes is a Y, I believe. Looks ready for a nasty short. We'll see. Already holding the shorts from lower, so that would be nice. Vuman Cipher B. Yeah, it's similar to Market Cipher. The money flow is slightly different. No cut. I repeat, no cut. Shout out to DK Insight. Real quick, guys, we'll say yesterday we did take a look at Zcash just to kind of show you guys this. We did take a look at Zcash. Massive confluence here. Weekly, daily MPOCs, golden pocket retracement. We are starting to get the rejection there. We did talk about that. Just given those key levels, even got the bearish divergences into it. There it is. Money flow comes out. Continuation of your downtrend. Is this going to be, I wouldn't necessarily, I mean, this is an area where the larger lower high can come in, but you do still have some of these higher time frame green dots. So, obviously, opportunity to take little scalps there, but, we'll see what these green dots do. 3-day green dot also printing, money flow trying to come back up. But overall, we're hoping at least for the overall thought process here, 2-day money flow, right? We got the green dot. This could give you bounces. This is the first area to look for a lower high. The lower high could potentially come in here to crack the lows at about 324. But if we did get above that, we have that second level up here. But it's the same thing, right? A lot of people always wonder, like, what do you look for? It's very simple, right? I mean, I like to look at more than just divergences, but one of just the kind of simple confirmations you got here were, 30-minute bearish divergences, higher highs, lower highs, 24-minute, higher highs, lower highs, money flow starts coming out. That's where you're looking for the rejection. So we'll see. Is this going to be the big rejection to break the low? I would just be careful with those 2- and 3-day green dots, and I think the 4-day looking to print the green dot as well. If these green dots are going to give us a bigger retracement, I wouldn't say the overall downtrend is broken, but we just look up towards the bigger level, which is the second fib, right? So if the lower high doesn't come in here, the next highest probability would be up in here. So we'll see what happens. Second zone sits here between about 453.81 and 495.44. And then, obviously, this first zone was between 396.54 and 418.96. Somebody asked to look at hype. We could take a quick look at hype. I believe we were looking at the Bybit chart. Look at this thing go, baby. All right, so flew right through. Right, well, you got a little reaction here on your golden pocket. Pushed above it. Push into your POC. 786, your weekly MPOC. Just ripped right through this. Very nice. And we talked about this. Bull divs or high time frame bull divs down at the value area low. And, I think a lot of people, when I look at the Bitcoin chart, they're like, this guy just wants to be bearish. It's not the case, right? When we look at the chart here on hype, we start to look at this, and it's like, hey, like, big money flow wave, right? 2-day money flow wave coming up. You have these very, very clean bullish divergences. Now, I wouldn't say the money flow on the higher time frames. I mean, 4-day trying to come back into the green, but overall, right, like this money flow is still generally trending out, trying to come back up on the 4-day, but you're still in the red. But you have the bullish divergences, right? These are very clean divergences. Clear lower lows into your value area low, higher lows on your momentum waves. This is like a reversal signal, right? Not necessarily reversal for a new all-time high, hopefully. But again, money flow is going to indicate the trend, and then your green and red dots are going to indicate the ebbs and flows, the ebbs and flows, the ebbs and flows, ebbs and flows, ebbs and flows, ebbs and flows, ebbs and flows. Right? The money flow indicates the overall trend. And obviously the higher time frames here, such as the 4-day, are still trending out, right? You got the bull div indicating a bounce, but not all bounces are created equal. Doesn't mean you can't long it. Doesn't mean you can't make money off it. In this case, with 4-day bull divs, these are high time frame divs, even to like buy a little spot bag there and, ride it up. But you just have the context is very important, right? This 4-day money flow could just indicate macro lower highs and lower lows, right? This would still be able to continue the downtrend. And then this was the first fib, right? Very similar to Zcash, except Zcash rejected its first fib. Hype, with the beautiful bullish divergences, right? 2 different coins. melted right through this, right? So if we continue up, the next big level I would be looking at would be this golden pocket value area low confluence sitting between 35.53 and 36.76, right? You have the confluence on your value area low there as well. So this is going to be important resistance. And then if you get above that, right, technically this zone runs up to the 7.86, but I would look at these as two separate zones. I wouldn't want to have that big of a stop loss. So I would look at the 7.86 and the POC as the next area of confluence, right? Just like on Zcash, if it doesn't come in at the first fib, right, the lower high doesn't come in here, the next place to look for it is going to be up in here, right? And then once you get above the 7.86, I'd be looking up to the value area high. Doorway to all-time highs, in my opinion, would have to be break the 7.86 all the way up at 51.34, right? We'll cross that bridge if and when we get there. Until then, you got to understand the money flow is coming out. If we get up here, you start flipping the 7.86, this money flow is cooking into the green really good. Maybe you can identify that as a fake out at that point. But right now, big green wave trending out. The thought process has to be eventual lower highs and lower lows, right? And either way, right, like these are going to be big resistances where you could get pullbacks. 5-day money flow trying to come up. That's interesting. 5-day green dot printing. And then we lose the money flow here, man. I wish I had the weekly money flow. We just have no money flow on the weekly. So interesting situation, right? But hype is much different than what we just looked at on Zcash, right? Zcash did not have massive, beautiful, bullish divergences at the low. When you don't have those big, beautiful bull divs, right, it's probably going to be more likely that you're able to reject the lower fib, right, as we did. Right, if we had massive, beautiful, bullish divergences down here, probably be more likely you get a bigger retracement. We didn't have those big confirmations. You just have the green dots. Let's see. Shout out to Servando Estrada. Wants to see gold. Yeah, we could take a look at gold, no problem. Dang, already 40 minutes late. Frankie, please stay till the speech. Yeah. We'll watch the speech. We'll be hanging out. And we were live for 5 hours yesterday. Yo, I ordered this Starbucks. What'd they say today? Enjoy the day. That's kind of lame. Usually they're more creative. But they put it in a bag, and they put the coffee on the right side of the bag. So, like, if you put the bag down, it just tips over. You pick it up, it just leans over, and, like, half the coffee spilt out. Spilt coffee is the story of my life. CZ shorting BTC. Is he? Maybe. Is Exo charts worth it? Shout out to Perry. I always tell people, it depends, man. I mean, you don't need Exo charts in the beginning, right? I would honestly recommend waiting a little bit, right? Master the candlesticks, master market cipher B, master the volume profiles, master how price action works, and then add Exo charts in a little bit later for extra confirmation, right? But, is it worth it? Absolutely, right? Because the order flow, people say price action is king, right? Really, order flow is king. Order flow is what creates the price action, right? The order flow is what creates the candlestick. So when you're able to zoom into those candlesticks and see what the buyers and sellers are doing at each price, obviously you're not just going, oh my God, a lot of buys, oh my God, a lot of sells, right? You have to understand the strategies that you're looking for, the discrepancies that you're looking for. But yeah, I mean, it's absolutely worth it. But if you're new, I mean, Perry, you've been around for a while. I don't know exactly how long you've been trading, but I would probably not, if I had to sit down with somebody, if I was like an in-person trading teacher, I would not sit down and like teach them order flow for their first lesson, right? They're going to get super overwhelmed. They're going to get super confused, and it's probably just going to wind up hurting them more than helping them. Let's see. What's up, Mafia? Hopefully you guys bought lunch because we are going for an even longer stream. Shout out to Crypto Paisa. We're going for 8 hours today, guys. I'm just kidding. You want to know more? Yeah, shout out to Perry. I mean, I would definitely direct you. I mean, if you fully understand the auction market theory and volume profiles, I would say the next step there would probably be checking out Exo charts. So for sure, in that case, yeah. What I like to do during FOMC is whatever the fast aggressive move is, I'll do the opposite for a mean reversion scalp, maybe in and out within 6 minutes, and then I call it a day at Frankie Candle. Shout out to the bedhead guy. I thought you were going to say when you see the aggressive, you just jump in, and I'm like, oh, man, FOMC is probably where you want to fade that, but that's what you ended up saying. So, yeah, I mean, hey, bro, if it's working for you, not a bad idea. It makes sense on FOMC because you get those fake out wicks. Yeah, not a bad idea, especially if you get a lot of the like aggressive buying at the highs and they're just getting absorbed. Get an SFP, man, slam it back to the downside. Gold. All right, let's take a look at gold. Whoops. Oh, I got to come over here. Oh, man, dude, gold breaking above the extension level again, right? So we had our next major target here between, call it 5,000 and I think 5180. Yeah, so we get above that. We flip it to support. We go up to the high. We get a little resistance starting to break out here. You know, I would have to find like, you know, there's going to be like local targets, right? You maybe pull like a super hyper local extension here. I don't know if that's going to get you all the way up. So yeah, there you go. You're right inside this zone here. But I would say, next local target, if you break above here, 54.29, when you look at it from a higher time frame perspective, right? Like the next major target to the upside would really be sitting all the way up here at about 56.76. Shout out to anybody who holds gold, man. Just printing money. Massive parabolic bull run. That is what a parabola looks like, guys. How much longer till we have a 24-hour Frankie Candles with AI, Frankie, that can't distinguish it from the real one? Shout out to Dave. Well, we just learned yesterday that we can't have a 24-hour stream. Apparently, the limit is 12 hours, which is a scam because when I hit 100K, we were going to do a 24-hour stream. We're going to have to like end it and then redo it maybe. I don't know how a 24-hour stream would work. I'd have to pull an all-nighter. Uniswap, yeah, we could take a look at how much time do we have. Yeah, we got another like 15 minutes. Did anyone in the Mafia catch the SFP? Yeah, people in the premium caught it. I didn't, but still long from a retracement. Yo, shout out to Bahar, says Frankie live equals no FOMC anxiety. Yeah, and we'll cover it live. We'll pull up the low time frames, and we already got our key levels set up here. So what are we doing now? Let me just check in on this real quick. Yeah, so we're just bing-bonging around. So, yeah, maybe approaching that major key level of support. And, again, right, guys, like chaos, right? Like this is, if you're new, this might be a dangerous time to start, taking your first trade here on FOMC. But, we got our key levels down here. 88,500 is really the level we don't want to lose here. Break below there, bigger move down. But on FOMC, it's like, I'll just say it right now. It's kind of unpredictable with the big SFPs. It's like you could see something like that, and then you close above, and then you go up. So, take it with a grain of salt. Hey, shout out to Taylor. Thank you for the super chat. Said, can you take a look at Tesla? Yeah, I'll take a look at Uniswap, and we'll take a look at Tesla. Says their earnings come out tonight after market close. I'll take a quick look at Tesla first. Let's see here. Pull up Market Cipher again. I think it's the longest I've ever gone without Market Cipher on my chart. Got a 4-day green dot. I'll take a look at the daily. I'm not going to give you the macro stuff. So your daily money flow is crossing over into the red. So obviously, just to kind of show this, right? What do money flow crossovers indicate? Or even just money flow coming out, right? Again, it indicates the trend, right? You have a big money flow wave. Start to trend to the downside, lower highs, lower lows, lower highs, lower lows. As money flow is trending out, you cross into the red, downtrend continues, right? Then money flow crosses back into the green. You start a little bit of an uptrend, continues, and now you got it crossing back into the red. Now, of course, this is subject to fake outs, but I would just say, face value, money flow crossing over into the red could be the continuation of the downtrend. And I can even give you some, I can give you a key volume profile to look for here. It is a P-shaped profile. You're building value. Let me just see. Yeah, so I would say, for me personally, this would be the range I would look at on Tesla for Taylor. Quick reminder, guys, please do not super chat your altcoins or your tickers. So you got your value area high up here at about, let me pull a fib too. Would have liked that to be a little bit more confluent. But you got your value area high sitting up here at about 457.61. Your POC, which you're struggling on right now, is about 437.82. And then you got your value area low here, 417.07. I would say if you lose this, that's where you could see a bigger drop down. Now, where would I look? And you can see I'm kind of combining these two profiles here. I don't want to over confuse everybody, but you can see your point of control here is very in line, right, in confluence with your value area low of this previous range, right? So with your money flow coming out, you know, what do we look for? People always say, like, I get the failed auctions. I get the deviations, rotation back up, deviation, rotation back down, bounce off the low, bounce off the high. Those are those high probability volume profile rotation trades. But, you know, how do I know if I'm going to break down out of this range, right? Well, we can use money flow for that, right? So we have a nice green money flow wave as we continued the trend higher, right? And if this money flow is going to continue out, you know, this could indicate that you're probably going to lose this range. If you lose this value area low, the next key level I would look at is, hilariously enough, right down here where you got your previous bounce at 385.08. Not just because you bounced here, but look what it is. It's your value area low of the previous range, right? So if you lose this POC, where's the next likely place for price to go? It's going to be that value area low. So what can I say? If I lose this value area low, next likely place for price to go is probably going to be right here. So those are going to be some major key levels I would look at. And yeah, money flow coming out. So we'll see what happens there. Shout out to Taylor. Thank you for the super chat, bro. Please not super chat your altcoins or tickers. Let's see. Are you serious about the 24-hour stream? I mean, I can be. We kind of joked about it. If we hit 100, when we hit 100K, we said we would do a 24-hour stream, but apparently YouTube only lets you live for 12. Lets you go live for 12 hours. Shout out to Young. I can't or Teresa Young. I don't know what that I can't read that first part. It says, bro, bulls are taking Bitcoin back up. Lost a lot of the sell pressure. Yeah, we do have the got the money flow. Got the green dot printing. 80 and 90 minute money flow crossing into the green. That is the hope there for the continuation up. That would be the hope there. Obviously, just FOMC chaos here right now. Let's take a look at sushi real quick. Take a look at it over here. Do we have a sushi chart? I think we do. Nope. The Bitstamp chart? I guess we don't. Oh, we got some stuff. Oh, yeah, we got something here. Oh, yeah, we took a look at sushi the other day. Yeah, the problem here is I can't really look left, right? So, like, the lower levels are kind of hard to come up with. I mean, you could try to pull your fib from your liquidation wick to your lower high here. You can see you're holding that golden pocket. Next key level to the downside is for sure going to be the 786, right? Sitting at about 17 cents, 0.1757. So, you know, when we look at this, right, we've obviously lost our value area, which was holding up very nicely, right? Low, back to the high, overvalued, auction back into the POC in the low, deviation, failed auction, back in, failed auction, back in, failed auction, back to the POC, and then eventually you get the bigger drop to the downside. And again, money flow comes out, bigger drop down. So, you know, as of right now, you know, you're kind of in no man's land here, right? Can't look left for any key levels. You got this big wick underneath you. The only thing I can come up with underneath you is the 786. This is absolutely critical to hold. I mean, hey, golden pocket would be critical as well, right? Your hope would be to hold here. if you get a bigger move up, right, and we'll try to see if that's going to be likely. Next place to look is essentially, I don't want to confuse you with all these local profiles, but like essentially you're just looking to come up towards that previous value area low, right? Because when we look at where the value is, it's obviously all up here. So if you get an imbalance to the upside, price is going to seek out the fairest value, right, or the closest area of fair value. So if we start impulsing up, that is going to be that magnet. And then that would be resistance until proven otherwise. If you could flip it to support, maybe you can get accepted back into the range. POC, value area high would be your next major rotation targets. Now, if you lose the golden pocket, 786 is key. If you lose this 786, I mean, you can look at your extensions, but at the end of the day, I'd probably be looking to fill that wick. Yeah, I would be looking to probably get closer down to filling this wick. The problem is I can't see any confluence down here because, again, I can't look left. So biggest levels, holding above the bottom of the golden pocket at 25 cents. You lose that, probably, in my opinion, getting a move closer to 17 cents. And then if you get the move up, 52 cents at the macro value area low is your next big target. Do you have any massive bullish divergences down here? Not really. Daily green dot is printing. Daily money flow is trying to come up. So I would say your long-term hope here is that this money flow continues up. Again, you don't have any bull divs or anything that would make me think that it looks beautiful like on Hype. Right? Hype had those massive, beautiful bullish divergences. You don't have that here, but your hope is to get that money flow to continue up, cross into the green, and then hopefully start a little bit of a bigger uptrend and start looking towards that 52-cent level. Lose this, looking down here. So that's sushi. 12-hour stream, break for 10 minutes, then 12-hour stream again. Shout out to Super. That'd be crazy. But I would do it if we had 100K. We'll take a vote. We'll do something. We're going to do a crazy celebration at 100K. We'll do some crazy giveaways, and then if people want a 24-hour stream, maybe we'll do it. I don't know if we're going to look at the charts for 24 hours. I mean, obviously, we'll be on them for a long time. We'll keep going back to them, but we're going to have to figure out something else to do. I don't know. Shout out to Indian Martini. Said, I selfishly hope we don't hit 100K. Got to keep our crystal ball secret. Shout out to Indian Martini. ETH, we covered ETH. Shout out to Balu. We covered ETH in the beginning of the stream. I'm not gonna. We'll take a look at it if we get some price action, but pretty much the same context as Bitcoin. Next major target, I would say, is between 3,058 and 3,088. But we'll see what kind of chaos we got here. But if you scrub back, we looked at it a little bit more in detail. All right, we got 5 minutes for our boy Powell to start talking. Calf workout video during the 24-hour stream. Yeah, we should do like some crazy stuff. We should have like segments, like 2 hours of TA, 2 hours of games, 2 hours. I don't know. 24 hours would be kind of crazy. Because like we're not gonna hold the same viewers for 24 hours, right? Like at some point at like, I don't know. I guess we have viewers in all different time zones. I'm just like trying to picture at like 3:30 in the morning what the live stream would be. We have to try to figure out some kind of logistics to make it entertaining, which I'm sure we could do. Maybe we'll go IRL streaming. That would actually be sick. That the logistics of that I think are pretty difficult, but I bet you Tony D is probably the best person to try to make that work. That would be sick. Then we could like go IRL. We'll go like to the mall and stuff. Just like IRL live stream. Guys, we're going to make money in the morning, and then we're going to take the live stream mobile and go buy something with the profits. That'd be sick. Yo, shout out to Indian Martini. Idea, Frankie takes a trade without looking at the chart, can only look at market cipher B. And then I would just have to have like a preset percentage stop loss. Because I would have to look at the chart to find my stop loss, but then I'm looking at the chart. I'd be down for that. You'll need some addies for that 24-hour show, though. Don't do drugs, guys. Make some sauce cooking with Frankie. Oh my God, that could definitely be done. You could sleep for 8 hours, and then Tony D can take over. Tony D, I wake up, Tony D's up 10 grand. That'd be sick. He'll game for the segment. That's not a bad idea. Tony D be much more entertaining to watch play games than me. Stock up on coffee and energy drinks. Yeah. Frankie takes a trade and breaks all the rules. No stop loss, just gambling. We could do that. Probably low probability of winning the trade. I guess no stop loss. Maybe you could win it. Everyone walking around the mall talking on their phones. I'll bring you a goat for the 24-hour stream. Yo, do you have goats, bro? Bro, special guest, Phoebe. That'd be lit. That'd be lit. All right, let's take a look here. Still just kind of banging around under this POC, guys. See what we get. Is 4-hour red dot printing yet? Yeah, 4-hour red dot looming. Let's get an alert on this so we can get alerted if it prints. Starbucks, my barista friends at Starbucks come to personally deliver coffee, say what's up to the stream. They know my order, and when I order it on delivery, they write to me. They're like, enjoy your drink, Frank. I guess they could see my name on Uber Eats, but they know my drink. They always write funny messages to me. Let's see. Crossing down. Zero line. Whoops. Beautiful. All right, so we'll get an alert for that 4-hour red dot, and we'll see. If we're going to get a push down towards this value area low, that 4-hour red dot is probably going to be the thing to do it, in my opinion. 15-minute money flow in the green. Interesting. That would be a conflicting signal. Probably holding a fib here. Yeah, holding that 786 currently. If we get the bigger break up, guys, really the next target, like if we just get a scam out of here, next major target would really be the next daily MPOC. Sitting right up here. So we'll see. I'm going to hide this. Yo, and shout out to Tactical Pew Pew. We did end up, I believe we did end up tapping that 786. We were waiting. Of course, happens after. We were watching that 786 retracement. Right? This was, yeah. So we were waiting for the tap of this 786 down here. It bounced, came back up. Eventually, we did wind up coming down to tap that for Pew Pew. I don't know if he got stopped out or not, but we did get it hit. I saw that hit, and I was like, oh, Pew Pew. They're on to us. Shout out to Teresa Young says, they're on to us. No more shorting. The Bulls ain't having it. Come on. Bro, I got a herd of goats. And you got goats already. You already won my life, dude. I want to trade Bitcoin for goats. Shout out to the bedhead guy. Or bro got a herd of goats. Do you have the herd of goats? Who has the herd of goats? I would like to inquire about getting a goat. I don't really think there's much left to sell. Yeah, and the other thing you could think about here too, guys, for the retracement, right? I know it gets kind of confusing, right? Like high time frames bearish. But again, the reason we're open to these moves up is, probably a lot of shorts, right? Start squeezing. Could give that bigger move. So we'll see. We'll find out sooner or later. Hopefully on the live stream. Yo, shout out to Gao says, remember everybody saying ETH would flip Bitcoin? What happened? Yeah, they say ETH's going to flip Bitcoin like every cycle. They said that last cycle too. Live stream link pinned. Thank you for that, Tony. Let me just get this ready, guys. Oh, he's up. All right. All right, let's pull up our boy Powell here.
weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter.
Let me know volume, guys, if you can hear.
In the
If you
labor
can't
market,
hear, let me know. I'll
indicators
try to
suggest
adjust it
that
for you.
Conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect
Volume is
inflation
cranked,
in the
guys.
goods
I could
sector,
try to-
which has been boosted by the effects of tariffs.
That might be better.
In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it
he's the
within a
soft-spoken
range
man.
of plausible estimates of neutral.
Feel bad for him.
This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to
Currently
determine
still
the
below the
extent
POC.
and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Delayed?
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook
Can't
case.
scrub.
And Treasury Secretary Scott Bessent
I
criticized
just
that as political.
reloaded one. It's in the
Can
same
you
spot.
say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond
current on here.
to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted.
Price
and you
action
also
tape
mentioned
so
the
far,
potential
guys.
for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So
If he was an
really two
animatronic, they
questions.
wouldn't
One
need
is
many
so
servos.
we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting.
Still below the
and
POC.
That should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timrose, The Wall Street Journal. Chair Powell,
that Mark?
you've generally
That's
avoided
Zuckerberg, I
engaging
think.
with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to.
like
This
the
is
same
really
thing every time.
about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say
Yeah,
whether
we
the
should.
Fed has responded
Pretty
to
much.
the subpoenas?
I have nothing for you on that today.
Those look like his cousin, dude. That's a Zuckerberg if I had to guess.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. Not something I'm. There's a time and place for these questions, but
He's tired.
Not something I'm going to be getting into today. Thank you.
Doesn't want to do it anymore.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a
Give it a
similar
try.
answer.
Thanks, Andrew.
We've seen quite big movements in the dollar over recent days. What do you think is driving the U.S. currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role.
Free Powell.
So, I have nothing for you.
But, what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Steve Irwin's uncle.
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer, thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the S&P and the longer run rates, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course no one knows with any precision. If you had a follow-up.
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the S&P from December,
this guy's the only one to get an answer out of.
Most people had additional normalization, but at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira.
Thank you, Chair Powell. Mara Mokway from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the
I
committee.
have profits locked in on the short, Teresa.
Today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to inflation have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
We have tapped into the top of the key support that we looked at in the beginning of the stream.
Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished.
Don't want to lose
but
this.
They still exist, so there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year.
Shout out to Capital, good point.
Around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew. Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made. You're right. We saw the labor market weakening, and we acted, and I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments, too, on inflation, though.
Currently getting a nice bounce off the support,
If inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now, anybody's base case, that the next move will be a rate hike. But, ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria. Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot, really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment, and so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with, and that in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
You think Powell's cousins with Bruce Buffer?
The thing is, technically,
it's like his
higher
older brother.
Longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be effects of longer-term rates from moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth. Thanks so much, Elizabeth Schulze with
Dude,
ABC
someone's
News.
got to crash
Republican
this
Senator
meeting and
Tom
just ask him
Tillis,
about
who sits on the
crypto.
Senate Banking Committee,
Gotta
said
have
he
it.
will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
She looks like she wants to talk to the manager. I'm not going to
More
lie.
broadly,
I'm going to say
what
it.
would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, it's, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Well, part of it is, to your point, part of it just is that
Next question. I want to speak to your manager.
Growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. Just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook.
That guy's name's Peter, for sure.
Outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions, and it's
apple cider
policy
vinegar
for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially, the economy has once again surprised us with its strength, not for the first time. And consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from, but. The economy overall, growth is on a solid footing. It looks like, and it's not just those things.
Guys, I gotta pee.
It's just the consumer is
Pavel,
filling
hang on,
out,
I'll be right back, brother.
surveys that sound really negative and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't make ends meet after 5 years of rising prices. What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from
we got another Karen?
Retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors, where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart, because one of our jobs is price stability. And so, the best thing we can do for people who are feeling that squeeze is to keep inflation under control and, frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build-out as being a positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
She wants the manager
so
too.
Everyone, of course, is watching AI and the deployment, and trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time, is rising productivity. So we always ask, well, this is going to be different, is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Becky.
Thank you, Chair Powell. Beyi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was
doesn't look
for
like
a
she
one-time
wants to
price
speak to the
increase
manager.
and then for
You guys know
inflation
what I mean?
to come down. And I was wondering,
looks
is
normal.
your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
Good point, Cigar.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress, but the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly, precisely when this will happen. But there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see, for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But we'll be able to see whether things are moving in that direction. I think we'll be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News.
Richie.
I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. Geopolitical risk for us is, a lot of it is around energy, oil. And so far we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, the economy, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but there's growth and there's how fast the potential is growing, and at a time of high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year, so the overall over the year the numbers were nothing like that. It was more in the mid-2s for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So there has been, you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
She needs to ask about crypto. I was gonna go. I'll make it go up. I swear.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is
great answer.
That our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure
All right, what do we
you
think?
noticed,
One or
gold
two
and
more
silver
questions?
prices have experienced historic gains of late, and I'm wondering how much attention, if any, you pay to those moves, and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
He's trying to get filled on his limit orders.
Hi, Nicole Goodkind-Barron's. Some prominent critics have charged that the Fed's economic models are
please.
somewhat backward-looking.
I want to speak to your manager.
It should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, and the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model. And we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that raise potential output, some kind of technological revolution, like happened in the 90s here, and like maybe happening now with AI, we're all over that. And everyone studies those periods, and we're very clear-eyed about the possibility that this higher productivity may persist, and also that it may not. We're not. No one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, And it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models.
Yes, via level.
If it's just a question of using better
Don't
models,
worry, he's on our
bring them
side.
on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been
My
talking
dad
a
is a
lot about
GTR.
tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time?
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything, and so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data, and our forecasts were not
Shout out to
far
Cal's
off.
World. What's up, dude?
What changed was, as
Good
I
to see
think I
you.
said earlier, what changed was what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
We're done?
We're done.
Okay.
All right.
Thank you very
Oh,
much.
Thank God. All right. Thanks, Grandpa. Love you. All right, guys. So we are currently holding the support level here. Golden pocket, value area low. This does remain our key support. We also had some bullish CVD forming here at the lows. We had a little bit of I think it was a 3-minute bull div into the golden pocket value area low zone. We also had some bullish CVD forming there starting to play out, giving us a little bit of a push above that point of control. Why did my alert not go off? I had an alert set here. But kind of a nothing burger here, guys. Just bing-bonging around inside the volume profile. But this does remain the key level of support here. We got the golden pocket value area high. You could say this runs down to the 786 at about 88,500. As long as we could stay above here, guys, we just do not want to get accepted underneath this value area low /786. This would indicate a little bit of a bigger drop down for me. Let me actually get rid of this tab. Hopefully this does not close Trading View. Oh, no, it's going to close Trading View. Oh, no, never mind. We're good. So this is 88,000. Let me actually pull this up on the 30-minute. Let me pull this make sure this is pulled on the right low. Okay, yeah. So we have the golden pocket value area low. This is the level that we looked at in the beginning of the stream. We have the previous value area high. This is the level that we want to hold for the continuation to the upside. Of course, we have the daily green dot with the 80 and 90-minute money flow crossing over into the green. Kind of uneventful here. Just kind of came down, tapped that golden pocket. Tapped on the top of this range. If we come back down, this does remain the key level. We do have the 4-hour red dot printing. I saw somebody say it in the chat. 4-hour red dot printing, but the 15-minute pretty chopped up. Money flow coming up, obviously not confluent there for a market cipher B1/16 bearish setup. We do have the 30-minute green dot looking to print, 45-minute green dot or VWAP trying to come up there. So we'll see what happens. This is really the zone to hold, in my opinion, right? We lose this, come back down into this range, and then we can start to look for some lower prices. I mean, this is just kind of the local scalp levels. It's kind of hoping for some more volatility there, but, I would say key support tapped. We come back down. Value area low, 786 is really the level we want to hold. Pretty simple, right? We're continuing to build value higher, right? So this is good, obviously, kind of just another way to identify an uptrend. So we kind of just want to continue up. We lose that 786. I would say that invalidates the idea, and we could very likely continue lower. If we do break to the upside, again, we'll see. I think if we're going to get the breakdown, I think the 4-hour red dot would be the thing that could do it. But again, we don't really have the confluence here, right? We don't have the 4-hour red dot with the 15-minute money flow rolling over with beautiful confirmations or anything like that. So it's kind of just a sit and wait scenario here. But this is 100% going to be the key level to watch. I would say between about 88,880 all the way down to about 88,422. That's the zone, right? And then even if you're looking at the local price action, right, you could just look within this volume profile. We get accepted in here. As you know, the volume profiles, price loses this range, gets accepted in here. 786 is the line in the sand. Probably headed down towards about 87.5. Now, I did want to bring up the liquidation heat map really quickly because I finally got this to, I think I fixed my Chrome. Still have a little bit of liquidity sitting up here, closer to our next target in the 90,000s. Major target, right? These are all very hyper local scalp levels. But if we just take this off the chart, right, we zoom out to the medium time frames, still just kind of chopping around our target that we were looking at yesterday before we got the move up, right? So we're still kind of clinging around resistance, but if we're able to break out there, next major target within the profile does remain the POC of the range. This is the medium time frame context. Value area low has been tapped. SFPs, daily green dot, 90-minute money flow crossing into the green could help us continue the uptrend. I would prefer to, again, hold on top of that $88,500 level, continue that uptrend. This becomes the next target. And if you're not looking for the scalps, right, obviously, value area low, POC becomes the next main target within the profile, but we cannot ignore this resistance. So kind of just really a chop fest here, guys. But the bullish case is we are still above support. We got the daily green dot with the money flow in the green. We got the 80 and 90-minute money flow. Well, 80-minute crossing into the green, 90-minute money flow coming up, exactly what we wanted to see yesterday. So as long as we can hold on top of that support, guys, hopefully we can push into that point of control. But again, you have that line in the sand to kind of look for the bigger drop down. $88,500 on that previous value area high 786. But what a brutal, the FOMCs are brutal for me, guys. As you know, I'm a chart guy, right? Like, show me the charts, I tell you the news. We play the live stream because it's, it's an event. But, is it dovish? Is it hawkish? Show me the charts. It's not really going to change my, I could take the information into account, but shout out to Sandra. Thank you for the super chat. Said, goodness, was like watching paint dry. Yeah, as it typically is. I feel bad for Powell. That's someone's. It's so funny. Someone's like, what advice would you give the next chair? Don't do it. Don't do it, for the love of God. Stay away. It's not worth it. Shout out to the Real Cal's World. What is going on, bro? Welcome in. Good to see you, Cal. I hope you are doing well, brother. She has a butter face. Oh my God. Yo, you guys crack me up. I just sit there and watch chat. You guys crack me up. Somebody said he looked like he was leaking battery acid, which is an insane comment. Did I get my car fixed? Yeah, turns out my car really doesn't have much damage. It's just got a scraped rim. So I got to get the rim replaced. I got to get the rim replaced. But yeah, it is. It's okay. There's no real major damage. There's literally not even really a scratch. It was just all tire rubber. So I was able to get that off. It is also ceramic coated, so that might have helped. Yeah, nice to see the charts hold up after Powell. Yeah, sometimes you get a little bit of like aftershock volatility. But yeah, I don't want to over confuse things. Of course, we just looked at like the hyper local levels, but at the end of the day, guys, yesterday on the live stream, right, we looked for the bounce into the major target. We're still bing-bonging around here, right? And very simply, if we can crack to the upside, flip the 786, next main target, POC, value area low, POC. I will be interested in rejections here, but with the money flow, I would be very cautious for a continuation into the value area high. If it doesn't happen, right, of course, I am still holding my shorts from higher, and we'll see. I will be honest, my entry's not as good on the long as it is on the shorts, so I'm a little more worried about them. Not worried, but, if I had to guess, like even like a wick down there could potentially stop me out. But we're long and short, baby. We'll see what happens. Kind of just waiting for one of these to play out. But the medium time frame context to watch is going to be that daily green dot, and then hopefully we can get this 90-minute money flow to cross into the green. And again, we did tap into the key local level. This was really the big level that we did not want to lose today, right? Let me hide this stuff, right? When we bring up those local levels, kind of the, the canvas to watch during the live stream, it was really like 88,880 down to about 80,000 right here, right? This was the level that we did not want to lose, and we survived. We tapped right into it, and we are currently surviving, right? Like, would have been not as good, right, if we just like came all the way down here during the live stream, during the volatility, and started cracking into the lower value area. We didn't do that, so that is nice, right? We were able to hold up on that support. With those 3-minute bull divs. Somebody said, I saw you draw that bull div, Frankie. I saw you draw that bull div. Indeed, I did. 3-minute money flow looking across into the green. See if we can get that 45-minute green dot. So we'll see. And we did have bullish CVD as well, right? So that could also be another argument to make it up to the next target. So if we break up right here, 90,000, about 90,800 to 91,277. And we also do have some liquidity up there as well, as I showed on the heat map. The major liquidity, I would say, sits above the highs, and then also down here below 86K. So just to kind of give you guys an idea, right, like without coming up with some kind of like crazy bias here. Like I said, there is, in my opinion, right now an argument for both cases. If we do come back down, right, if we wind up rejecting our key resistance here, or maybe we come up to the higher target, we get a bigger pullback, the biggest level of support to have marked off on your chart is going to be sitting between the value area low, daily MPOC, and daily horizontal. Could actually extend it to this daily as well. 86,550 all the way down to about $85,411. And then I will be interested in potential bounces there. But we'll see. I don't know what the chart's going to look like. If we break down, the line in the sand for the big drop, guys, is the 786 at 83,929. We lose that, I'm looking down towards 80,500. And I cannot wait, guys. I cannot wait to get out of this range. I'm so sick of talking about these levels. I'm so sick of talking about this range. We're making money. We're trading it. Of course, Mafia making money whether price goes up or down. But, I mean, this is just brutal being in this range. So I personally don't really have a preference. I mean, I guess rip the Band-Aid off, send it down, get it over with would probably be my preference, but I don't really care. Let's get out of this dang range so we can at least talk about something different for a little while. Let's see. We're coming for those shorts, baby, and that's the other thing too, right? We do have the bullish CVD. We did see a lot of shorts open yesterday. A lot of them did get kicked out already. But, yeah, maybe we could start to get some bigger short squeezes coming in here as well. We'll see what happens. One more retrace to 86, then pop, and at least that's what I'm hoping for. I missed the long. Shout out to Izzy. Yeah, definitely, if we do, we'll be watching right down here for the big level, right? Obviously, you'll have some local levels as well. Not till October 5th. Shout out to Guardian. What is not till October 5th? Not till October 5th. Let us know. Oh, the bottom, maybe? I don't know. Yeah, crazy that people are fearful at an 89K BTC. Yeah, I mean, I don't really know what the mass, I feel like you can make an argument in both cases, right? Or like, are more people hopeful here for a continuation that this is the bottom and we're going to go up into new all-time highs, or are more people fearful for a drop down? I don't know, because you could kind of argue the people who are fearful down here are also hopeful, right? Like they're fearful, but like kind of just hoping that it's not going to go back down. I don't know. Not something I really, make decisions off of. But, could this be the bottom, right? Of course, not impossible. It's really the weekly time. Like you just can't ignore these higher time frames. We need to see this turn around in a really big way. And I showed the exact examples in the past, right? Like it's the exact same situation that we've seen before bigger capitulations come in. From a volume perspective, you have that volume gap underneath you. So, one thing we can say, you can't guarantee that we're going to lose this and get the big drop down. Low battery. There's the there's the every other day low battery warning on the mouse, guys. But it can't guarantee that you're going to lose this, right? Obviously, market cipher B on the weekly totally looks like that. That's why I say it's probably the higher probability situation, even if we get the bigger retracement, right? Would not invalidate that idea just yet. So, a lot of people might think, if we get the retracement, what happened? I thought the weekly was coming out, right? It is, right? It's very similar to this situation here. My sentiment down here would be probably lower highs and lower lows, and then people are like, what the heck? We're pumping. I thought we were bearish. It's like, you got to zoom out, understand the context. But, regardless of if that's going to happen or not, one thing that you can say is if we lose these lows decisively, the fast capitulation makes sense to happen here because of the lack in volume, right? Price moves very quickly through these low volume gaps, right? Very quickly. We held it here. We also held the 50-week moving average there, right? We had big support down there. We don't have that right now, right? We're obviously high volume node, major support, 50-week moving average, major support. So if we did get the retracement, huge level here, right? Like into the 50-week moving average, right? And then if we lose this, nothing, right, until down here. So we'll see. We'll see. Another 5-hour stream. Just got back from the gym, and Frankie is still cooking. Hey, shout out to Crypto Costa. We've been here since yesterday. It's actually a 24-hour stream. Shout out to Crypto Costa. Bear flag logic would send us to about 66K. That would be ugly. Yeah, shout out to Izzy. If you want to look at the bear flag, we pulled the flag poll yesterday. Does bring you between about 70 to 67K, right around that area. Shout out to Daniel Spooner. Thank you for the super chat. Say, can you send an updated ETH chart to the chart links? Yeah. There's not really much of an update. But yeah, I don't know if there's actually even going to be any new levels there, if I'm being honest. But yeah, I could drop that. Nothing happened. Damn Powell. Yeah, super boring. Hoping, FOMC volatility, give us something, and just a big nothing burger there. John Vucci says, I still think we hit 100 to 108K. Everyone gets bullish, then dump. Yeah, that would be an extremely, extremely painful situation for the bulls, right? Because it would make them feel very good and then kind of dump on their dreams. That's a scenario that we've talked about many times. We have a few different macro ranges here. We take it step by step, right? There's no real reason for me personally to look up to 118 to 110,000 yet, but there is very key levels up there. Is that what you said? 108,000, I think. 100 to 108, right? Within this local profile, right? If we can start cracking the highs, we get a new high to come in. That's where that 50-week moving average comes in at about 101,000. Anchored VWAP from the all-time high, also confluent with that level, and you also have your value area high and your golden pocket retracement. Very, very key level to look at. If we get above that, above us is the $108,000 786, which is also in line with our previous range value area high, right? So you could just look at this range from the get-go, but of course, right, like cross that bridge when we get there, right? So definitely, like if we get a bigger retracement, first major zone, 50-week moving average, of course, leading into the golden pocket at about 103K. We also have some other levels around 105, but just to keep it nice and simple, right? If we do go up and break the highs, right? If we're going to see that bigger retracement come in, right? And also just looking at the volume here, right? Pretty nice volume gap here. Get above the POC, crack the highs. That would kind of lead us right into this massive high volume node, right in that zone. So kind of makes sense, right, from a volume perspective. And then if we start breaking above there, that's where I would turn this off and look at the bigger range and say, well, hey, get above the POC, shoot into the golden pocket, 50-week moving average, local value area high. Once we flip above that, you got to get above this high volume node, and the 786 is sitting right there as well at about 108K. So definitely a valid target, John Vucci, if we do get the bigger retracement, right? And then again, just for anybody who's wondering, for me to really start looking for all-time highs, got to really get above 116K, right? 100, about 116K. You got a high volume node, and this is the highest that I would want price to go before looking for high. This is the last place to look for a lower high. And maybe we get some information on the charts here where it looks good for a new all-time high. If it pops up, we'll talk about it. If not, definitely a huge level of resistance. You would have to flip this to invalidate the idea of the lower highs and start looking for new all-time highs. So, of course, we're very far away from there, so we'll talk about that if and when it comes into play. But just for anyone who's curious, just kind of talk about the long term there a little bit. Even with the dollar falling, nobody wants crypto. Yeah, it's the metal show right now. It's the gold and silver show for sure. Crypto is dead, yeah. And even from an attention standpoint, like, nobody cares. Really, nobody cares. Because even when you get a big move, people are like, oh, my God, Bitcoin pumped today? And it's like, oh, Bitcoin pumped today. Oh, we're just still in this nasty range, right? Absolutely brutal. We've been in here pretty much for 75 days. And we've actually compared this to kind of how long we can see these ranges form in the same context back in 2021, right? This range, right? Kind of very similar. I would say we're probably somewhere like in here. Crack the high, 50-week moving average is just above. Back down, lose the range, send it down. But timing-wise, 114 days, pull it from the low. 100 days, I mean, I don't know. Hopefully it doesn't take that long. That would be absolutely brutal. But, yeah, I'm ready to get out of this range, guys. I'm tired, boss. I'm tired. Shout out to Carlos said, Frankie, sure, but don't you quit, Frankie. We need you daily. Shout out to Carlos. I will never quit, baby. We're here sideways, up or down. Because the beautiful thing is, right, this is a trading channel. From a trading perspective, right, we're just cooking on the trades. So it's not bad from, like, a trading perspective, but just from, like, content perspective, nobody cares. There's nothing to talk. Even the big levels, the big moves here. Like if we're chopping around, I could sort of like, oh, let's talk about some upper levels that, like talk about something different. Even all of those have been covered so many times, right? Like we just gone over the big levels here, the big levels at 108 to 110 and 116. Below, we have the $80,500 low, and then the value area between 70 and 67K. So it's just like these levels of just, it's brutal. But it's a lot better on the daily live streams. Instead of going live at night trying to come up with some kind of narrative, right? We just cover the live price action. It's kind of more in line with the channel anyway because we're a trading channel. Watch the live price action and trade. Hey, shout out to Dustin. Said, thanks, Frankie. Made a few good trades using the volume profiles, SFBs, and Market Cipher B. Let's go, baby. Shout out to Dustin. Let's go. If you ain't trading the Frankie Candles way with volume profiles, what the heck are you doing, man? Shout out to Tommy. Said, Frankie, you pay really good attention to the comments section. Always makes this one of the best streams. Many just babbling away. Yeah, shout out to Tommy. Yeah, it's the interaction with the streams like my with the Mafia is like my favorite part of the stream. All right. I appreciate that, bro. Silver won't stop. Yeah, we already took a look at gold. Let's take a look at silver real quick. Actually, please hold. Yeah, a little rejection here at the PLC. Oh, my God, guys. Oh, my God. Oh, my God. 0.6% move. It's happening. But, yeah, we take a look at silver real quick. That is a parabola. That is a parabolic bull run right there. Man, that's like 2017 Bitcoin. Come on. Oh, it won't extend all the way back there? What the heck? Can I get the I can't get the 2017 bull run. But yeah, that's this is like literally 2017 Bitcoin. Maybe even like more aggressive. Crazy. Just up and to the right. Or not even up and to the right. Just straight up. Insane. Absolutely insane. Let me see here real quick. Come on, TradingView. There it is. So... yeah, actually, now we could probably pull the Bitcoin chart over it. What am I doing here? Oh, I'm not going to be able to separate it. Dang it. Well, anyway. Yeah, we're just playing around in this next extension level. Next major target would be sitting... oh, no. What the heck is this? My scale's all messed up. Sorry, guys. There we go. Next major target sitting up here, 121.15. Crazy. Absolutely crazy. $318%. People make fun of metals. You just got to wait like 100 years, and then you get your run. Oh, man. Obviously not great for Bitcoin. Hopefully we can get this to pull back in an aggressive manner. That would help, right? If we can get the metals to start getting a big pullback, maybe that'll help the bigger retracement on Bitcoin. Yo, Trinidad James, all gold, everything. Yeah, for sure. He's probably a multi-billionaire at this point. Yeah, definitely way more aggressive. That monthly time frame on silver is insane. Yeah, monthly. Look at that monthly candle. Currently, 66% monthly candle. Still ain't got nothing on Bitcoin's volatility back in the day. But what was our biggest monthly candle here? Let's see. 51%. 52%. Man. Silver giving Bitcoin a run for its money. You buying gold and silver right now, Frankie? I need a pullback first. No, absolutely not. I would never in a million years buy here. I would need some kind of big pullback. No, totally not. It's just like my strategies are just the opposite. Like, yeah, I don't buy guys. It's just crypto. I don't buy the top. I buy the top of anything else. But no, definitely not buying silver up here. Yeah, shout out to Indian Martini. Said take some profit on your long and buy yourself some better mouse batteries. Yeah. Guys, I literally just because now I have 1,000 Amazon batteries. This is this week's pack. This will be gone by Friday. Yeah, I should just get a rechargeable mouse. It'd make way more sense. Yeah, Bitcoin best performing asset of all time. Yeah, 100%. Is Pax Gold worth trading at all? Yeah, sure. Why not? Imagine if gold, silver, and the AI bubble all burst at the same time. Man. Get like a global financial collapse. Yikes. Yeah, if Bitcoin loses 89K, I'll be very happy. Let's see. Let's jump in here to the lower time frames. Yeah. Man, we've been getting pretty lucky with the volatility. Like literally making like almost on every live stream being able to call the decent move. Just kind of a little bit of a lack of volatility here, even with FOMC today. We'll see. 5-hour red dot looking to print. We'll see. You guys know that key level. Where should I place a trade right now? Shout out to Nemation. That would be the wrong question, in my opinion. There may not be a trade right now. A lot of people say, I mean, you could place a trade right now. But, for me personally, I always tell people, trading is a game of trapping, right? You want to find your key levels. Like, for example, for the long SFP that we had down at $86,000. Maybe I could pull it up in the Discord to kind of walk you through it, just kind of how we look at this generally. Now I'm going to spend no more than 30 seconds trying to find this setup. Right, here it is. So you want to set your traps in the market. We were waiting for that value area low, 786 SFP, right, down here, for quite some time. Obviously, it took some time for Bitcoin to eventually get down here, but you want to set your traps, understand what you're looking for, and then understand the confirmation you're looking for. If you see the confirmation, then you could look to take the trade, right? If you ask, where should I take a trade right now, maybe I'm wrong. I could be wrong, but it signifies to me that you don't really have a plan. You don't know what you're looking for, which is totally fine, right? You got to learn, 100%. There's no shade at all. If anything, I'm happy you asked that question, right? You want to understand, but that does insinuate to me, right? Like you might not know what you're looking for, so I would say you got to learn, right? You got to learn first before you just try to figure out where you're going to place a trade. I mean, you could totally do that. It's going to be more gambling, in my opinion, but. For example, right, we wait for that $86,300 low to get taken. Specifically, we were looking for a swing failure pattern, which is simply a wick below and a candle closure above, right? Once you get that, that's your SFP, and then you get the move, right? So sometimes there's just no trade. Now, we did have other trades in here that we took, but they were all key levels on the chart that we waited for, right? When we took the trade up here, we did not just randomly, in here say, should we long or short? What we do is we mark off the key levels or set the traps in the market, and then when we come into those traps, we look to take the trade, right? So like right here, there might not be a trade. When price is pushing up, that doesn't necessarily mean we're going to long that, right? We just wait for the push into the key level where we know there's a high probability of a reaction, and then we take the trade. In this case, it was a short. I am holding that, and it did play out, right? And already profits locked in, stop loss at break even. So that stops out. I'll still make some money. So where should you take a long or a short right now? We could bring up the key levels. But for me personally, right, like, this would not necessarily be a place where I would be personally interested in a trade. If you have a setup there or something that you're looking at, well, then you take the trade. But for me personally, right, when we take a look at the key levels, I would say the major levels that I would be looking for is, number one, you're already pushing into resistance, right? So again, I wouldn't necessarily be looking to take the trade right this second right here. But, we could get the pullback. But I would say your next major target to the upside would be between about 90,795 and 91,200, right? We have the liquidity above. Of course, I'm not going to give the trade setup here or anything like that. We do that in the premium Discord, but, this would be considered an area of interest, not a place to set a random limit order, right? Because if you don't get the confirmations, AKA, if we didn't get the SFP down here with bull divs, there probably wouldn't be a trade to be taken, and you'd probably just run right through the level, right? So you got to learn what you're looking for in those key areas, right? Or the traps. Price is the mouse. When the mouse runs into the trap, you still need that mouse to take the bait, right? If the mouse doesn't take the bait, it might just run right past the trap, in which case you wouldn't want to take the short. So this would be an area of interest I'd be looking at, right? I'll just say this. You got a wick up here. Could be an SFP opportunity. I'll leave that there. But if we get above that, right, then I would look for this to be the next major level. To the downside, the next major level I'd look at would be down here where we have our next key levels of support, daily MPOC, and the value area low. If we came down here, I'd be interested in looking for a potential trade, right? So trap, trap, trap. So that's where I would say, that's where I'm looking to take my next bigger trades. And then, of course, locally, you could zoom down as low as you want. You want to take a look at the 1 minute, right? Then we could just look at the local range. Bitcoin continuing down here a bit, right? Pull up the scalp range. Here's our value area, right? But obviously, you don't just want to wait for the low, long it, wait for the high, short it. And I know it's like there's always, like, I always say you don't want to just trade this as signals, like long the low, short the high. And it's like really hard because I say that. And then it's like, well, someone said yesterday, like, I don't know, man, like kind of seems really high probability. And it is. But again, like there's going to be times, like if you start shorting the value area high and there's no confirmation up there, you might be like I shorted the value area high and it didn't play out. And it's like, well, what was happening on price when you pushed into that level, right? Like these. So locally, our local key level of support would be sitting actually, I will pull this up a little bit to the start of yesterday's sitting right here. Right, so if we came down here and we saw some confirmation, this is the level that we would hope to hold. Again, I'm not going to talk about the exact confirmations, but again, you have to learn, right? So I wouldn't just jump on the chart and be like, should I long or short right now? Obviously, price will go up or down, but you want to find the areas where you have high probabilities of a reaction. We've already pushed into this level, right? Like this is why, oh my God, we're pumping. I want to long, right? Like what should I do right now? It's going up. Should I long? Probably not, right? Why? Like there's no key level here, right? But we did have this key level of support, golden pocket. The same zone I'm looking at right now. What happens? You push in and, you didn't get the full rotation, but look at this. Some bullish divergences, you tap into the level, much higher probability that you're going to be able to get that trade to go into profit, right, for almost a 1% move. So just to explain it a little bit, should you long or short right now? I wouldn't take a trade right now, right? If I wasn't short from up here or at this time, long from down here, right, it's like too late to take the trade, right? I don't short as price is coming down. I short as price is coming up to enjoy that entire move down. So hopefully that makes sense. And if you're here to learn, you're in the best place. We teach this every day, full frizzle. I forgot who said that, but shout out to you. Shout out to Zach. Thank you for the super chat. Said the real question is if you would have put a short in on gold or silver as a limit order, where would you place it? Shout out to Zach. Simple answer to that question is I would not set it as a limit order. But again, kind of the same idea, right? Let's pull it up. Where's my next major target? Now, of course, I can go down to the lower time frame. I can find scalp shorts. I wish, you can find those. It's the same thing as Bitcoin, right? Like when we look at Bitcoin, like what are we find those big macro Fibonacci extension targets. And of course, when we look at the Bitcoin chart and we look at those major targets that we looked at, of course, I don't know exactly which nobody knows exactly where the top is going to come in, but you could come up with a plan and have your key levels or traps set and say, well, hey, if we get up to the, I'll just pull it up here, right? Because I think I still have these on the chart, or some of them at least. So we had a local extension target up here between $124 and $118,000, right? This would be a place I'd be looking for a short, and even at a major extension level. Now, it was kind of interesting here because and then we had a macro extension level at 130,000, right? But we don't know for 100% sure. Of course, you're never going to know 100% where the exact top is going to come in, right? But we know this is our first major bull market target, technically between 92 and 102,000. We get a little cool off, right? But there's plenty of time left in the cycle. Continue up. The next major target was really sitting at about $130,000, but we found some local extension targets that wound up being the current top. But that's kind of what I would do, right? We set the major target here. Could this have been the all-time high forever? Maybe, right? Or for the bear market? Maybe. But obviously, we do the analysis. We understand it's probably not. But that's what I would do. We just find the macro target, still get a major pullback. Find the major target, major pullback. Is that going to turn into the continuation of the bear market? Potentially. So I would do the same thing on gold, right? And that's kind of what we have here on the gold chart, right? We have the first major extension, right? Of course, this could be like the earlier target on Bitcoin. Doesn't mean it's going to be the all-time high, but that's an area of interest. If you saw massive weekly bear divs into this level, maybe it's the top, right? Or at least you could, and even my short from 126K, I didn't short that and say this is guaranteed going to be the all-time high, right? We could have faked that out, right? So it's very hard to know for sure where the top is going to come in. But I would say like the next major target to look at, if we can make it up there, is about 56.76. If we start seeing major, right, macro bearish confirmations up here, we see massive weekly bear divs, massive monthly bearish divergences, money flow coming out on all the higher time frames. That would be a place where I'd be interested in looking for some shorts. That could, obviously, high probability of a reaction, right? And then maybe it plays out. You could take some profit, and then who knows, right? Like at the end of the day, you move your stop loss to break even. You take profit, move your stop loss to break even. If it decides to be the top and it continues down in a big way, you could just trail down your profit, right? And then maybe you wind up shorting the top. So I would say that's the next big target, Zach. Probably 56.76. Are you guaranteed to get up there? No, but that's what I would be looking at. And then, of course, again, you could kind of try to find some local extension targets, but they're kind of hard to find in this massive parabola, right? Like there's not a lot of significant swings to pull your extensions from. Like these are probably all ran through already. Yeah, like you're already pushing above that one. So, and again, you want to be careful shorting something that is this strong, right? Of course, you want to be looking for the shorts on the way up, but money flow still coming up. This is a wonky bear div. So you're going to have to wait for some price action to develop. But as far as targets go, I would say 56.76 is probably the next big area to go. If we get up there, that's huge. It'd be really hard to find not going to last forever, right? Eventually it's going to pull back. But that's what I would say. That'd be the next major target there. All right. Let's see. Dump is coming on gold. Yeah, at some point the dump will come. Nothing goes up in a straight line forever. That is for sure. Shout out to French Toaster dropping the candles in the chat. Welcome in, brother. Welcome in. Spot buying the bottom because it's easy and pretty risk-free. Shorting is the tricky part. Yeah, like something on gold, right? Like accumulating gold long term is pretty much always going to be a decent opportunity, right? Long term, but a lot of people, especially people in crypto, right? Like they just don't want to wait. So people just kind of be sitting here. You bought gold in 2012, right? And it's like, oh my God, this thing's crushed. And then it's like, oh, no, this thing's boring. And then all of a sudden it winds up paying out long term. But again, that takes tons of time. Shout out to Zach. Thank you for the super chat, bro. He said 57.68 it is. Thank you, Mr. Candles. SR agrees. Shout out to Zach. Not financial advice, of course. Uniswap. We could take a look at Uniswap. Uni or Uni, as somebody. Hey, guys, the chips. Let me know in the chat. The chips, UTZ. How do you pronounce it? Is it Uts, Uts, Utes? Phonetically spell it in the chat. Tell me how you guys pronounce that. I would say Uts. Uts is OOTZ. Utes is YUTES. What is it? I say UTS. Spell it in the chat phonetically. Yeah, India Martini, S&P 500 does up and to the right forever. Yes, not up in a straight line forever, but up and to the right, like Bitcoin, right? Up and to the right over the long enough period of time. It does continue up and to the right. Yeah, Izzy, I'm not gonna lie, man. I think about gold a lot. I'm just like, I know I should be buying gold, and now it's like can't chase it. So. And then the pullback is like, oh man, you're probably just gonna get it. I'm probably just gonna get it at such a worse price, but it's all right. Long-term investment. I give my gold coin. I just get some gold. You can get like useful gold stuff. You can get like spend some good money, like spend a few $1,000s on like nice gold silverware, like gold utensils, and then you could use it, and those will just go up in price, right? Or watches or jewelry. At least you pay a little bit of a premium, obviously, on those, but over a long enough period of time, those materials will go up in value. So Graham Stephan bought a 36 millimeter Datejust that was gold, and he said he bought it when the gold price was X, and he said at this point, the profit from the spot gold price going up has made him break even. He got a free Rolex. Pretty sick. Shout out to Zach. Thank you for the super chat, bro. He says, that was Mr. Candiel Sr. agrees. Shout out to Zach, also known as Satoshi, maybe. But yeah, taking a look at Uniswap. Let me see if we have a chart here. We must have a Uniswap chart. We must. Maybe we don't. No. We have to. It's impossible. Bitstamp? No? All right. Well, I guess we'll get the Binance chart here. So I'll mark this up real quick. Inside your bear market range, right? 2022 bear market range. So, what I say, Uniswap is overvalued. Probably not, obviously. But this would be like the macro range I'd be looking at. Value area low, 475. POC, 622. Value area high, 941. So, again, same thing as the hyper local profiles, right? Obviously takes a much longer time for them to play out. But it's the same idea, right? Like you're at the value area low of the range, right? This would be considered generally cheap prices. Doesn't mean you can't deviate below. Technically, the deviation below would be the undervalued price, right? This is undervalued. This is overvalued. That's why we look for shorts above these levels and longs at the low and deviations below. And this is why you don't just want to set limit orders, right? Because like you set a limit order at the value area high, right? There's much more to the market than just shorting random levels, right? If you set a limit order here, probably not going to work out, right? Going to lose money. But then once you get up here, maybe you're looking at SFP levels or something like that. You look for confirmations. That's where you can say, hey, I'll take a short. And then on the way down, you could say, well, if you get accepted back into the range, I know there's a high probability of getting accepted back in here. Let me see. So this is what I would look at. Value area low. 475, 622 at the POC, 941 at the value area high. And then, of course, you want to, this is not where I would look for fresh shorts, of course, right? You're shorting into support. You've already gotten a massive drop down. So it's never really a place I would look for shorts. I would be forced to look for longs down here if I were trading the 3-day time frame, of course. But what I'm looking for here are potential bullish divergences on the higher time frames, which you do not have. So see the daily here real quick. Yeah, a little daily bull div here into the low. Very local. But if you could hold on top of this value area low, I would say your next major local, local on the daily. 786. Golden Pocket. POC. Right? That's going to be your key resistance. Right? And of course, you could pull these to from the lower highs to your heart's desire. I'm not going to mark out every single level. I'm just kind of giving you like the overall context and the bigger levels. But, if you can get a bigger push to the upside, right? Like you're looking to target that POC, this would be the zone I'd be looking at if you get a bigger rip to the upside. If Bitcoin gets the bigger retracement, if the altcoins can follow along, right? Like a big move, this would be a move of about, 27%, right? Like this would be a big level to look at. Now, when we look at the weekly, your money flow is in the red. Why do I say be careful here? Because if you get that full retracement, this could be an area to look for a lower high, test the POC, and then eventually you lose this and get the bigger drop down. Now, I won't cover too many key levels down below, right? I'll just pull the fib here. Ooh, starting to lose that golden pocket. Let me pull this on log because it's pulled over a long period of time. Yeah, these are rough, if I'm being honest, right? Because you just have this big liquidation wick. You know, you could maybe try to pull some value back here. Just kind of walking through the process live here. Yeah, I mean, I would probably pay attention to this range as well, right? Why is that? Well, it's your kind of only other value area down below. Break in, hold the POC, back into the upper range. Hold the POC, back into the upper range. Hold the high, back into the upper range, back into the upper range. You break through the low, or you break through the high, or I'm sorry, break through the value area low, the upper range, into the value area high, the lower range. They're right on, stacked on top of each other, right? Very high probability fill of the profile. Deviate below. Obviously, this is all one liquidation wick, but you're at key support here, right? You lose this, right? If you can't, I mean, even if you do something like that, but this weekly money flow does indicate a continuation of the downtrend very likely on the higher time frames. So if you can't hold this, you get accepted into this range, I'd be looking down towards the POC of the range, which does end up being confluent with your golden pocket. So that would be big support down below. Whoops. So there you go. That's what I would look at. You got a little daily bull div here at the value area low. So very simply, if this, then that. That daily bull div can give you the push up. Obviously, very dependent on what Bitcoin does. Very careful around here. If you get the lower high, get accepted in here, maybe sent down there. The bull div doesn't play out and you get stuck in here, right? Still just looking down towards that POC. Lose the POC, look to head down to fill to the value area low. You have 786 confluence, and you also have the potential wick fill down there. So there you go. There's some Uniswap. Shout out to Tony D said, according to Google, it's HUTZ. How would you say that? UHTZ? Let's see. Wow, 36% of people say Utes? That's crazy. I would have thought UTZ is UTZ is, I guess UTZ is UHTZ. So that's split, 36 and 36. 27% say Utes. If I had to guess, when I ask people in real life, I feel like it's just random. People say Utes, people say Utes, people say UTZ. But UTZ seems to be right. Hey, I may not be an English major, guys, but hey, I know how to do talking. What's the special 3 levels for Bitcoin, boss? Shout out to Epic Review. If you just scrub back to the beginning of the stream, we covered the major levels we're looking at. I'll probably bring them up before we hop off again anyway. I'll take a look at them in a second for you. Let me just get through this super chat. Shout out to OC. Thank you for the super chat. Said, hey, Frankie, could a short on Sol to 97K work here? Let's see. Take a look at Solana. Oh no. Man, every time on FOMC you get the trading view glitches. So you're getting a bearish oh, there's Bitcoin's alert. I'll come to that in a second. Value area low of your local range got tested and rejected. A little test reject there. Yeah, you got your green dot confirmed, 80-minute money flow. Come on, TradingView, you can do it in the green, 90-minute struggling there. Me personally, right, I never short, like, I very rarely will short as price is pushing down, right, because technically, and I'm not saying, right, you have to trade your own plan, right? So I'm going to give you the analysis, right, but like from an entry perspective, right, like technically you would be shorting into major support. Does not mean that you're not just going to break through this, but just from like a theory perspective, right? You are shorting into support at that point if you enter right this second. Again, for the shorts, right, what you want to do is you want to find the resistance levels for, in this case, right, you have your previous value area low up here. Maybe you have some confluence. Let's see. Maybe you have a Fibonacci retracement in there. Well, look at that. Right, there's your resistance. And then you would want to wait for price to push up into these levels, and you want to look for confirmations. Did you have any confirmations here? Right, just in hindsight, looking at this, you had a higher highs on your price action, lower highs on your momentum waves. There's your 30-minute bear div, and then you can look for the rejection, and then you're shorting at resistance. And then at least if you do something like this, right? Let's say you take a short somewhere here, stop, just above the high. At least and then you're targeting, say, 97K. You could at least say to yourself, well, hey, I have support underneath me, but at least if I come down here, I can at least protect myself with my stop loss at break even. So if it bounces here and stops me out, I won't lose money. You could even take some profit there, potentially making yourself stop out in profit. And then you're not shorting directly into support. You're shorting at resistance. You have a better chance of being in profit sooner than later. You can protect yourself. And then if it does end up bouncing there and coming up higher, you don't lose money. And if it decides to just break through the resistance, well, hey, beautiful, right? So with that being said, from an entry standpoint, I would understand that logic a little bit. But let's see here. 90 and 80-minute money flow, kind of a little bit suspicious here, right? 80-minute in the green, kind of coming out. Your 90-minute got a little crossover. It's back into the red now. So your daily green dot, I would probably wait for this 90-minute green dot. And again, I'm not telling you what to do. You got to trade your own plan. Just giving you my thoughts on where I think price will eventually go next. You got a 2-day VWAP coming up here. Let's see, 92K. And then again, right, you have these big support levels here, daily and weekly, between about 112.71 and 105.90. That'd definitely be a level you want to, and again, it's from a medium time frame perspective, not that you can't short at the value area low, but, in general, right, like we talked about this on the live stream, coming up, holding the value area low, right, and more often than not, right, like, am I shorting here? Probably not. Shorting here, probably not. Shorting here, probably not. Shorting here, probably not, right? Because obviously this is the bottom of the macro profile. It's the bottom of the local profile. I'm much more likely to take the shorts at the highs, right? So a short here, we talked about this on the live stream. Once we get back into this value area, the POC was very likely next. Ignore the local range, right? Flip the value area low. POC is likely next. This would be an area where I'd be interested in shorts. And specifically, we actually looked here for potential, talked about, right, looking for potential fake outs of this high, right? You got the SFPs, then you could take the short. So for me personally, I like to snipe the tops and the bottoms. So for me personally, like if I was not in a short right now, I'm late, I would just let it move and try to find a better entry. I would be saying, hey, if I get a bounce here and we get a push into the golden pocket 786, then maybe I look for a short. If I don't get it, well, probably just miss that move personally. And then again, just understand you have key support down here before you come down to about, I don't know exactly what you're looking at 97K. Not saying there's nothing there. Just be aware you do have support down here, so it might not be a bad take profit if you do end up deciding to short. But at the end of the day, I can't tell you to short or not. I would just say I don't like shorting into support. But again, that's not to say you can't break through it. I just would have rather shorted on the way up, shorted on the top, shorted on the top, short on the top, short on the top, short on the top. Not really here. So me personally, I wouldn't look for an entry here. Doesn't mean it won't play out, right? That's just me personally. Everybody has to trade their own plan. But in general, right, weekly money flow crossing into the red. I would say in general, coming down to 97K is probably not unlikely. But yeah, and especially with the outlook on Bitcoin kind of being iffy, daily green dot, 90-minute money flow coming. If that gets the bigger retracement, right, Solana's probably going to get the bigger retracement as well. And then you look at the higher time frames, it's like you get the bull divs. Yeah. Hard. I just don't like shorting into support. But if you do break this and you melt down, 112.66 to 105.83, probably the next major target. Lose that, I would be looking down towards about 91.8 to the towards the weekly to take out this low, which would get you to that $97,000 target. Not financial advice. Of course, trade your own plan. If you want to short it here, by all means do that. I'm not going to, I'm not someone who's going to sit up here and be like, if you short here, you're an idiot. Not at all, right? Like, literally not. So yeah, I would say long-term 97K would not be super out of the question. I just want to see, if Bitcoin gets that bigger retracement, I think you're just at support. You just want to realize that. So hopefully it helps you out. Shout out to OC. Great question. Yeah, shout out to Spinner Trade said the best entry trigger, in my opinion, was the 30-minute bear divs with the 30-minute SFP. Shout out to Spinner Trade. We call that the CandleMafia trifecta. I don't know exactly which one you're talking about. I don't know if you're talking about Solana, I don't know exactly what you're talking about, but yeah, like if you can get a little like bear divs, right? Confirmed, and then like on that bear div, that's also an SFP. Whoo, baby, I love that. I love that. You get the bearish divergence indicating a rejection. You get the SFP clearing out the liquidity above. Super high probability entry trigger. Shout out to T Money. T Money says, don't you think gold is moving dodgy? Forget the moon. It's on Mars. Yeah, gold is definitely on Mars. Gold going to 5,400. Yeah, I mean, next major extension target that I have is 5676. Not saying you can't get rejections earlier than that, but that would be like the next major target for me. So, yeah, I wouldn't say that's out of the cards. Shout out to Patient Works. Patient Work wins. Hey, it could be applied to trading too. Says, Frankie, you're the best technical analyst on the market. I've learned so much from you. I'm truly grateful for all the value you share. Thanks a lot. Shout out to you, brother. That's what we're here for, baby. That's what we're here for. Let me actually come into Bitcoin because we did get an alert set off here. Yeah, tapped into the value area low. Yeah, so this is starting to push into the supports that we do not want to lose here, guys. 786. 88,440 is really what we don't want to lose. We already tapped the golden pocket here, filled it here. Let's check the 15-minute here real quick. No bullish divergences. 4-hour red dot is still printing. So this is the key level we do not want to lose. I would prefer, if we're going to continue up, I would really prefer to hold on top of this blue box down to 88,440. So she's testing. Tapped on the value area low. Front ran it here, right? And guys, the volume profiles, like it's programmed into price. Look what happens here. Value area low, POC, value area high. Full rotation. Value area high, POC, value area low. Full rotation. Value area low, POC, value area high. Full rotation. Value area high, POC, front run. Oh my God, oh my God, oh my God. Programmed into price, value area low, full rotation. Now, of course, I'm not saying you can never front run the low and go to the high. Obviously, this is possible. But again, when it's a game of probabilities, I always talk about how it's much more likely to see those levels tapped. And like, why would you be thinking, oh, we're above the POC. Doesn't that mean value area high? Well, technically, it's a little bit of a sticky situation because yes. But I always prefer to get that full fill. And what happens? Above the POC, back down to tap the value area low. Same exact thing, right? It's all fractal, just like that. The same price action, right? When you tap the high, the full rotation to the low is the higher probability. You come up, oh my God, full rotation, still higher probability. Again, not 100%, but the probability is probably 8, 9 out of 10 times. Now, this is the exact same scenario, right? Just to show you that this happens fractally. Lower time frames, higher time frames, it's all the same theory. It's the same thing on the bigger profile. Above the high, back into the range, can't get out, money flow comes out, POC, lose the POC, value area low, value area low. Oh no, we're pumping. Programmed into price down to the low. As a matter of fact, I did not catch this local long, right? Which could have been a nice little long into the POC, sure, right? But what do? You get the bounce, we have the short and the premium at the POC. Why do we anticipate that? Well, you could eventually target the value area low, and there was a bunch of local stuff we were looking in here as well, right? High probability fill of the volume profile. Full fill. Insane. Whether you're looking at the 5-minute, the 1-minute, the 2-minute, the daily, the weekly, does not matter. But, of course, there will be times, right? Again, it's probabilities, right? Not every time, but, again. Sometimes will you, I could try to find like right here, right? Perfect example. Value area high, POC, lose the POC, value area low, value area low, value area low. Nope. Oh, POC, value area low, nope, right back up to the high, right? So again, I'm not going to sit here and say it's 100%. You will get those fills. As a matter of fact, we did trade this in the premium Discord, and we actually did know that the support level down here was a zone between this golden pocket and the value area low. So it's like, hey, in case we front run that value area low, right? Technically, the support starts at the golden pocket. But even so, right? That's like 1 out of 8 times, right? 1 out of 10 times. everyone wants to know the 100% probability, right? It's like, oh my God, I found the key of 100% probability. No, right? It's not always going to be like that. But again, 8 out of 10 times you will see that happen. Like, oh my God, low, right? Shout out to Dez, said, is Bitcoin still safe for higher technically? If you scrub back like 30 seconds, we just covered the local level that I'd like to hold personally. Oh, and then someone asked for the 3 big levels above us: PLC, daily naked point of control, 90,812 to 91.3, value area high 93.2 to 93.7, right? And then above that we have this 786 near like 95K, but it's pretty far away at this point. Key level to the downside, value area low, daily MPLC daily 86.3, down to about 85.4. Shout out to N4, says, from here, 92K, then 88K. I don't hate that. Then all-time highs. I hope so, N4. I would have to say on the weekly it's a lower probability. Obviously not impossible, but I hope so. That would be great. Obviously have to be real cautious here. Because again, right, like probability-wise, as I show every day, 100 times a day, right, probability-wise, this weekly is 100% looking like it wants to make one more capitulation down, right? Even if we get the bigger retracement. But this has been spot on. Every single situation like this, 1, 2, 3 times in a row. Rare bearish sign here on the money flow, flashing into the red on the weekly. Right now it's in the green, but it's been flashing into the red, right? So maybe you don't get the crossover, you scam all the way back up and you get new all-time highs. Definitely possible. Maybe this is the one time it doesn't play out, right? Again, it's a game of probabilities, but this literally has been correct every time. And it's not just the money flow, right? It's the context, it's the timing, it's the moving averages, it's the market structure, it's the bearish divergences. There's a lot of stuff that is identical to what we've seen in the past. And honestly, the fact that it's happened in the past is like the lowest confluence, right? Just looking at this weekly chart does not look good. But just even TA in general, right? Does that mean that we can't go to all-time highs? Absolutely not, right? I've been in this space enough, right? I've been trading for long enough to understand that there is a randomness to the market, right? These are unpredictable markets. TA can't, if only TA could be right 100% of the time. It's where risk management comes in, right? So I'd be naive to think that that's impossible. But it could be possible while also being the lower probability, right? Like here, the lower probability was a new all-time high, right? Did it end up being an all-time high? No, the TA wound up being correct. Could this have flipped and come into a new all-time high? Sure, right? It's not impossible. But again, 8 out of 10 times, even like 6, 7 out of 10 times, if you're just on the right side of that probability, right, that'll be profitable over time. So we'll see. I hope. All right, I will be on the team of, I want to see that. But, of course, we don't trade the markets we want. We trade the markets that we have. But definitely not impossible. And 92K, then to 88. I don't hate that either, brother. I see what you mean, but notice the structure is also different going up this bull run. Yeah, for sure. Could make a difference, right? I think it's a lot of a big argument that a lot of people have for the, this being the low is like, well, hey, low, high, higher, low, higher, high, higher, low, higher, high, higher, low, right? Higher, low, higher, low. Sure. 100% a higher low. For me, right? And then I don't know how often you watch the stream, but I explain this a lot. Not all higher lows are created equal. Again, whether you're looking at the weekly, the monthly, the 2-minute, the 1-minute, doesn't matter, right? Not all higher lows are created equal, right? This higher low was much different context, right? We were very early in the cycle. The halving had already happened. We expect new all-time highs, right? It was very unlikely this would be a 5-6% new all-time high and then go into a bear market. You're above the 50-week moving average. It's acting as support. New all-time highs to come. Money flows in the green, etc. Then we get another big pullback. A lot of people thought this was the bear market. I was not in that camp. You're above the 50-week moving average. You're putting in a higher low. But again, not all higher lows are created equal. This one was created as a new high to come, right? Still have plenty of time left in the cycle. You have bullish divergences at the low, high time frame bullish confirmations. Money flow still in the green. You're above the 50-week moving average. New high to come. We get it, right? This time, the context is different, right? The money flow just kind of simplifies looking at the structure, right? Right now, we have money flow crossing into the red, which again, last 3 times that we've had that happen, rare bearish sign through the inception of Bitcoin. That's only happened 3 other times. They've all hit exactly for new lows to come. This is the 4th one, right? Hopefully the one that doesn't play out. But you have the higher low. Beautiful, beautiful. Why is it different than this higher low? Well, you're below the 50-week moving average. We've had enough time for an entire cycle to go by. And most importantly, you have massive weekly bearish divergences, massive 2-week bearish divergences, massive monthly bearish divergences, right? Weekly money flow coming into the red, and you're below the 50-week moving average. We don't have this massive support underneath us anymore. We have it above. Now this is massive resistance. So I would say cautiously, I would say I'd be more cautiously optimistic for this. And we also have a lot of resistance above that as well. But same thing here. Structure here, obviously different than this bull run, but massive move up, higher low, higher high, higher low, for sure. Not all higher lows are created equal, right? We have a higher low, but that doesn't instantly mean higher high. We have money flow coming into the red, massive weekly bearish divergences, massive monthly bearish divergences, indicating mostly off the divergences and the money flow coming out, indicating this would likely be a lower high and a lower low. It is the exact same situation. Doesn't mean it has to play out, of course, right? Maybe we get the all-time high, but it is just a different context, right? Here, looking for highs, right? Here, looking for highs. Here, money flow coming out, indicating lower high, lower low, right? Like every other time in every other cycle. 50-week moving average has never been broken above. Doesn't mean it can't happen this time, but again, evidence pieces, probabilities, bearish divergences, etc. So this higher low would not be created the same as all those other higher lows back here. But what I would say is this structure, right, being different, this could make a difference, right? Meaning if we do break the low, maybe we don't have to go down for that 70 to 80% correction. Maybe because we have all this beautiful structure here, maybe we can get caught up in here, right? And that's what I'm going to be open to before we just start looking for the 70 to 80%, before we just start looking for history to just repeat because history repeats, right? Like we can't just do that either. But instead of looking for like the exact same thing, right? Like, and what are the chances it plays out exactly the same? I mean, probably pretty low. It might rhyme or something like that. But before we start looking for a traditional, 70-ish% correction to the downside into the 40s or the 30s, we can identify that we do have decent volume here, decent structure here, high volume node, right? We can't ignore this massive level of support, right? So maybe that structure helps us have a shallower bear market. That's my thought process, right? Of course, new all-time high is definitely not impossible. And I honestly hope you're right. I hope that analysis, I hope we just wind up getting the higher low and snap into the high. But that's just kind of where I come from in my thought process. I think they both make sense. I would have to say this is the higher probability, but again, come on. Get above the 50-week, get that money flow back up. And maybe this doesn't close red and we just come back up. That'd be great. But time will tell. Time will tell. We'll only know looking in hindsight. Shout out to Spinner Trade, said we completed a 1, 2, 3, 4, 5 impulse Elliott wave on the weekly and are in an ABC correction phase and likely starting the C wave now. Shout out to Spinner Trades. Yeah, Elliott waves. I gotta start using Elliott waves. That's one thing I don't use for like higher time frame analysis. That is really helpful. I actually only trade the markets I want. If the setup isn't there, patience pays better than a losing trade. Yes, absolutely. True. Shout out to Mr. Market. You could trade the markets you want because you are the market. Crypto has had its time to move on to other assets. Yeah, maybe like metals. Tech stocks, all-time high. Gold and silver, all-time high. Even the DXY is going lower, and BTC ain't doing anything. Yeah, none of those things are mutually exclusive. I don't even know if I'm using that correctly. But yeah, like just because, we've also seen in the past, we've also, and I do think crypto will change over time, right? I've said this during the bull market. I think potentially the time, especially with altcoins, being very specific, I think potentially are gone the times where you could throw a dart at a board. It used to be back in 2017, back in 2021, you throw a dart at the board, whatever altcoin you buy is just, rising tides lift all ships, right? I do think we're in a situation where you got to, especially in this cycle, we didn't have the liquidity that we needed. Obviously, that's a huge factor. But you also had to be very picky with the altcoins that you chose, right? Very picky. So I do think it will obviously, as the asset matures, it will totally change over time. But there has been times, right, if you overlay the SPY over Bitcoin, I'm not going to spend the time trying to get that to work. But even in 2021, Bitcoin topped out first, and the stock market kept running up shortly after it. So we have seen that stuff decouple for like short periods of time. I think a lot of, we're just not on a risk-on environment, right? And you see that through metals flying to the upside, right? You think about like the fundamental meaning behind that. DXY going down. Yes, oftentimes you do see the DXY inversely correlated to Bitcoin. Makes a lot of sense. But we have this kind of curveball of metals flying to the upside, right? That's not good for risk-on assets, right? So this is kind of a lot of stuff that goes together. But I do agree. I think the market will change over time for sure, especially as it matures. Does anybody else put hot chocolate powder in cold milk because hot milk is gross? Shout out to Kalia. Hot milk is gross, but I like hot chocolate. Hot milk is disgusting, though. I would agree with that. Like, drinking warm milk would be crazy work. 5,400 gold. There she goes. Ooh, 53.96. 53.96. There she goes. I didn't realize when that person said $5,400 gold that we were right there. When lead gets expensive, that's when it's time to worry. Yeah, probably. But let's see. Let's jump back on the Bitcoin here real quick. Yeah, just pull up those scalp levels. Yep, holding the value area low currently. But yeah, those key levels, I'm not going to redraw them. I guess they're right here, right? Hold above here, guys. Lose that 786. That's where I'd look for the drop down into our lower value area. All right, just simple auction market theory. Want to hold the value higher. So do not want to lose this box. We'll see what happens. 4-hour red dot. Going to confirm. Still got 2 hours and 32 minutes left for that. So we'll see what happens. That is the key level of support. What are we? Dang, 3 hours, baby. These live streams are just getting longer and longer. But medium time frame, regardless of the lower time frame levels, medium time frame, above the lows. If we have to go down for the bigger pullbacks, we can look for bigger supports. But for right now, the big levels I'll give you, currently rejecting our local level that we looked at yesterday. 786 being rejected. Yikes. Got your money flow coming up here, though. So I would say to the upside, next target right here. To the downside, biggest level I'd be interested in would be right down here below the value area, daily MPOC daily. So we'll see. Will that money flow cook us back up, or will we get the move back down? We shall see. I'm going to continue holding my shorts. We'll see. And yeah, all of my trades right now are guaranteed winners. I would prefer, right? Not saying it's the higher probability. I would really prefer a big drop down. I'd be like, my short from up here and short from up here would absolutely pay out. But Peter Schiff would say, told you so. Yeah. Yo, shout out to Peter Schiff. He's probably in his glory right now. What would you do with gold? Maybe you could eat it if you were starving. Yeah, I think it would come out probably exactly how it went in, to be honest. Maybe iron would be more useful to eat. Input hot cocoa into my coffee when I don't have creamer. Big huggies. That is interesting, bro. That is not I got to try that. Pew Pew rounds aren't cheap, so brass and lead are already pricey. That's why I invested in a loading station a long time ago. Hey, shout out to Mr. Market. Not a bad idea. That's going to be the real currency if things go down. Medication, canned food, guns and ammo. That's really what's going to be worth it. Because like if stuff really goes downhill and we're in like an apocalypse, hey, I need Advil. I'll give you gold. I don't want your gold. The heck am I going to do with this? The world is on fire. So anyway, cheap creamer. True. I would think actually it'd be expensive, hot chocolate. I don't know. But guys, that's what we got. Pretty lackluster FOMC, unfortunately. Levels respected, but we'll see what happens, and we will check back in with you guys tomorrow right here on the Frank Candles live stream. Thank you all for being here. I appreciate every single one of you. Shout out to all the Karens that asked Chapal the the hilarious questions that he just kept giving the same answer to, which is basically ununderstandable mumbling. But thank you guys for being here. Shout out to Fiat Level. Shout out to Webb. Shout out to Darren Does Things. Shout out to Jesse. Was Jesse in here at some point? Tony D, Mr. Market. N4, love the way you explain, brother. Thank you. Shout out to N4. We'll see, bro. I'm rooting for you. Hopefully you're right. And if you stick around, we'll be able to talk about it when we start getting closer. But yeah, thank you guys so much for being here. Smash that like button on the way out if you don't mind, guys. It helps us out so much. And we'll see you here tomorrow. That's all I got. Hasta pasta. Frankie Candles out. Bing bong!